glory. Heartbeat thumping, another story. Green and red, flashing voices loud. Future kings standing on their cloud. Flying with rocket scooter AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Treading on, the pulse ascending. Mind on fire, never ending. Trees of gold, endless fight. Push on through the endless night. Riding with a rocket scooter AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, midnight glory. Heartbeat thumping, another story. Green and red, flashing voices loud. Future kings standing on their cloud. Checking the charts with their AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, checking the charts. Midnight glory. Sanctuary in awe, it's blending. Mind on fire, never ending. Dreams of gold, endless fight. Push on through the endless night. Push on through the endless night. Push on through the endless night.
Here, wait. How about that? Gotta turn my mic back on. Hey, what's up? It's practicing my mime skills. We back. The new mic stand. Look at this. There's no arm. Let's make some money today, baby. There's no arm that does this. I can see your comments. You guys see me so many times on the stream. I was like this. What are you guys saying? What are you guys saying? This beautiful mic arm. It's like flat. My arms go right underneath it. Like, it's hard to see unless I aim the camera down. I don't want to move the camera down. But imagine, like, here's the table, and there's just like this like black metal arm thing that goes, like, my arms go right underneath at the type. Oh, it's lovely. Lip reading again. What's up? I am saying, let's see. Looks much better. Like, well, much better, right? The mic is just here. I mean, it's like, I got to take a picture of it, but I'm not even halfway done. The camera arm that I got, I need to get one more piece, and I got monitor mounts for this other setup here. I mean, it's going to be like much more ergonomic. Really nice. I am super excited. So good morning, Simon, Mad Yoda, Rich, Stu, JTR, Ransom, Ian, Ricky, James, Holland, JTR, Todd, Jonathan, Bruce, Adolfo, Geocap, and Francesco, and on and on and on and on. What's up, Alex? What's up, Sell, Pop, Buy, Drop, David, Dillis, Alex, Smirk, Ricky Vaughn. Smirk loves listening to his song in the morning. By the way, I need to get with you guys to hook you up with your lifetimes. So we got to make sure you don't get charged again for your monthlies. You and Jen. Good morning, guys. Good morning, good morning. Okay. Getting ready to rock this up. What is going on? Is it? Let me try something. Oh, because my camera. I'm like, why is the scooter all cropped up here? We'll figure that out later. But anyways, oh, I'm loving the new. It's like, it's just so. Oh, it's so nice. Now it's not as like, like I can't really adjust it that easily. I'm sure I'm gonna mess up the. It's not designed to be adjusted. It's designed to swing out. Like the other one was on a spring and you can lift it, lower it. It's like, you know, a podcast mic, and it can just move every direction. And for 10 years, boy, that spring is held on. This one rotates this way. I don't know if you guys can see, but I can see it. Hold on. Let's come back this way. Can you see some of it? Can't see it. Oh, anyways. It swivels pretty well. Like I can just, like, if I don't want to use it anymore, bye-bye. Or more importantly, bye-bye. Kind of nice. The goal was to get rid of the springy one was so cool, but now, like, since I have like 2 computers, I had this giant like metal arm that would come over this way, and I'm always like, you know, always having something in front of my face. You guys can't see my beautiful face, so now I've got something that's a little more, you know, kind of right. And I don't know if I want to lower this some or figure it out. We'll play with it, but right now it's pretty nice. It's so, I feel so funny, like I'm like right here. So let's lower this. So let's lower it like that. There we go. That's even better. Oh, that's so much better. How nice is that? My arm just goes right in here. Please hit the like button. Please hit the like button. Please hit the like button. All right, get ready to get started. The market's selling off already again at the start of the day. Let's start by chit-chatting about what's going on. There's a lot of stuff going on this week. One thing I'm worried about is I'm off to the side, though. I need to put it here. Is what I need to do. It doesn't make it all the way over here. It's like to the left. So I have to kind of like lean into it this way. All right.
Hit the like button. Rocket scooter. Yeah, yeah, yeah.
I need to start putting some graphics on the screen so you guys hit the like button. Market's starting to sell off pretty hard. Again, as we talked about, monthly maps. The maps are showing that the market selling is not over. Pockets of volatility leading into next week. We got, you know, S&P global numbers are coming out today. Non-farms are coming out tomorrow. It's a huge market day. You guys know the rules. Hit that like button. So I had a chat yesterday with Tradeify. Interesting stuff. Interesting stuff that they're doing. They're going to start giving us accounts to do giveaways, so that sounds awesome. One thing I can tell you that came out of that meeting. Other announcements today. So we'll be doing a Tradeify giveaway sometime. Maybe early next week. I don't know how many we're going to get, how many we get to play with, but if we get 4, we'll give away 1 every week. If we get 2, we'll give away 1 every other week, something like that. If we get 20, we'll give away 5 every week. So, this overheated supply. So look at the way the market's panning out. I'm telling you guys, the worst is not over yet. We're opening below DD bands. You guys know the rule. Usually it's a sit out. Automatic sit out. You know how these rules go. We are sitting at 57.66 lower S&P. While you guys are hitting like button, I'm going to spit out some numbers. Everybody, make sure the first thing you do when you join the stream every day is you walk in, you smash that thumbs up button. Every single day the stream gets slightly bigger. It's crazy how big we're getting. But, in due time, we've paid our dues. We've been here for a long time. I love seeing you guys show up in the morning every day. An hour before market opens. Ready to work. Ready to prepare. Okay, 57.66 on the low side. S&P on the down. 25.35. 2163. 20,163. Downside on NASDAQ. Right line. Hit the like button. Yeah. 200, that's the goal. 200 at the start. Everybody, thumbs up, bottom right. Get up and dance. Your little Donald Trump. Okay. This is red line values, yeah. $21,363 was the upper. Oh, wait. 20,163. 20,163, sorry. 2163. My bad. That was it. So get prepped and ready to go. New release today. Weekly hedge pressure is here. Which is cool to see. Interesting that it has a value of 0, though. Already. We're going to kind of double check, make sure this is all right. We start out. All right. Hit that like button. All right, so starting off right at the door. We are outside DD bands. You know the rules on this one. Let me give you the cheat sheet so you can see what it is I usually do at this point in time. That's not the cheat sheet. That is Rocket Scooter. Yeah. Yeah. Hit that like button. Yeah. All right, let's get this guy really quick. DD bands. Let's know the rules. You guys that have taken the boot camp classes. You will note the handouts are very reflective of. Hold on. What we're seeing today. Right out the door, DD band. So we know the rules that I usually follow. Out the door, on the way down. The band can be support. The ratio greater than half is a good long setup. Good long and strong. The ratio later less than half, which it will be. We take a lesser size position, accounting for volatility as well. So just kind of like showing you guys what we have here. Anything down in here. Well, let's do greater market first. Greater market. So a couple of good news coming out. Number one, I had a meeting with the CEO of Tradeify yesterday. Pretty awesome. Very awesome meeting. I can't give you all the details, but I'm going to tell you it was a very lucrative meeting. They have a lot of good plans coming out in this industry. We're going to be getting free accounts to give out to you guys. So as I told you before, I was hoping we would get that. Let's just say they were honored to hand us out some free accounts for a giveaway. So they are very big supporters of what we do. You guys are very big supporters of what they do, which is really interesting. Same with ETF. And we have two really good prop firms that we work very closely with, which is very awesome. You know, Elite Trader Funding has always treated us well. They've always done me well. And now we have a good relationship with the Tradeify folks. So very cool stuff that they're doing. I'm not going to reveal, you know, any of the business plan stuff, but Brett was very like open about what he's building. It's like, okay, this is some cool stuff. I'm actually really excited to hear about it. So, and in due time, but in the meantime, we're going to get some accounts to give away from giveaways. As soon as they hook me up with that, I'll let you guys know. We'll be doing Tradeify giveaways now. ETFs every Friday, maybe Tradeify every other, whatever schedule it's going to be. So greater market today, right? DD ratio, we're going to guess is less than half. We're going to be kind of stuck in bear market again. And I'm going to say we're probably below, probably less than MHP. It's going to be hard to say because we'd have a big rally yesterday, but I'm going to guess that all three things are bearish again. Monthly map, bearish. Okay, so monthly maps are bearish and volatile. S&P, bearish. DD ratio, bearish. Everything's bearish. Looking for confluence in some of my trades. The lower band I usually take a long on. That ratio is less than half. I hit it a little smaller. We're definitely below the band. So down in here, there's the rule. No shorting down here. Even if the market crashes, the goal is to miss out and let it fall. The only longs I take inside of here, the only longs I take are strong pivots only. We have a red line to green band. That's one of them. And I'll show you guys the numbers in a second. But that's it. But we have monthly hedge pressure, bear zone top, bull zone bottom. If we're above MHP, that'd be great. Great long pivot to long off of. And then, of course, your liquidity pockets grab along there as well. I feel like right here, let me tell you guys what you guys think. I feel like to match the rest of the theme. Oh, Matt needs like a yellow border around the picture. What do you guys think? Do I need like some kind of border or something? Does it look like I just like seamlessly blend into the background? Do I need to draw or put some kind of gold in? You know, gold is our theme. Dropping out gold, some sparkly stars, some unicorn horns. I'm down for that. I mean, I love showing people how alive I am. Come on, pump it. No. You know, like something like further separate the overlay as a third dimension. Because like, this is what I'm saying. If I just do this, there's just like a camera, and sometimes it gets to look a little weird. Like when you do this, like it just looks like literally like, okay, It's like, okay, like everything here, the borders, it's like gold across the top, gold across the bottom. And then there's just a camera with like, okay, what's going on here? A golden wreath. Maybe a halo above your head. Oh, I can't draw. I can't draw. I can't draw on the, you can't see because this is below. That's hilarious. That would be awesome. Like a little, yeah, that's what I'm saying. Okay. All right, guys, don't forget to hit the like button. Yeah. Hit that like button. Okay, so today, market, if there's anything we could maybe get a dead cat bounce, I'm not really sure. In other news, we have released weekly hedge pressure. You might see a nice little cool looking blue line on your chart. Which halo is the best halo? It's not. I always said 2, and then when 3 came out, I still said 2. But then when like Reach and all the other ones came out, then I said 3. 3 was probably the one that got the most play. 2 was like, you know, let me think of how I'm gonna say this. Yeah, like 2 was like the Nirvana Nevermind. It was like the album that changed music, right? Halo 2 was literally the album that changed music. Halo 2 invented competitive gaming in the United States. I know they're already doing it in Asia, but Halo 2 is what created esports in the United States. There's no argument about that. Halo 2 started a revolution. I was a competitive Halo 2 player. I went to a handful of MLGs in college. I was on a team. And I was remarkably average. I wasn't that great. And Halo 2 was like the game that started it all, right? And like CE was competitive and whatever, but you know, it was like a small group of competitive people. And the competitive scene in Halo started actually in Texas. Like a handful of people that were like the top players in the world were all from Texas. So these types have like really competitive LAN parties and stuff in Houston and in Dallas. But then Halo 3 came out on the Xbox 360, and it was just like a whole different... It was the explosion where it was like everybody was doing it, not just competitive people. And Halo 3, dude, I literally like I still have dreams about walking around in the pit. You know? Like, I played it so much that when years go by and on Halo Infinite they remake the pit, I'm walking around, I could tell exactly what's slightly different. I'm like, oh, this is slightly bigger. This is like this crate is an inch to the right. Because you have so much muscle memory for playing CDF on the pit, and we all remember, right? And they remade the map for Halo Infinite. Good old days. I'd say Halo 3 though is probably the best one. Little artistic background to give it some depth, otherwise solid. Yeah, something grand with like little, like I'm trying to think of like a freaking Renaissance painting, like this is like a golden frame around it. You know what I'm saying? We'll figure it out. I won't do something too elaborate. I just wanted to do some separation from the screen. Looks like the chart price action does. Okay, so good morning, guys. Welcome. We have a huge news week ahead of us, right? We've got a lot of stuff going on. Market's already moving lower. I'm already looking for outside DD band setups. We know that I don't take any shorts to chase lower. The probabilities are really solid that we close inside of the bands always. So I never really take that 8% of days that go below. So 8% is down here. 92% is up here. So this is kind of how I look at the split. I try to long it back in if I find a pivot to long from always. So really for red lines, liquidity pockets like bear zone top, bull zone bottom, and monthly hedge. Those are the only pivots I long from, and I hit it small. every time. But the volatility, the way that it is, small is going to mean micros, like I've been doing, playing with like 3 to 5 micros. It's still going to be $2,000 worth of loss and gain on NASDAQ if I'm wrong. So micros are the way to go. Everybody knows how this works. This is one of those, we're still in that bear market. When markets are volatile, you know, we cut our position sizes down. I attack around pivots, just to teach you guys. In a non-volatile market, let me explain what that is. Pre-market, you guys come for the morning lessons. And don't forget, I'm about to spit some fire. 1 out of 3 people have hit the like button. Here's the rule. As the market opens, 5 minutes for market opens, the screen goes blank. I will make all of you miss the trade that I'm doing if you don't hit the like button. Bottom right of the screen. I literally will black out the screen and do it. And you will never know. So tip your bartender, guys. We're going to make it a habit. This is going to be our, like, you get in and you're just like, smash, right? Get it going. Our streams are growing bigger every single day, which I love it. I'm super happy to see you guys saying you're supporting the stream. Okay. Lower lows. It's hard to say how far we go, but all indications lie from the volatility that we can predict from monthly maps that the S&P is aiming for that 5,500 level, if not lower. I was teaching a lesson yesterday on volume profile, on how we predict it. I don't use a volume profile, though. That was why that's there, but I'm going to leave that there because I'm going to show you guys something cool about it later. On the lower side, we've got 55.76 is the lowest of the low. So in this particular range, that's where I think we're going. Yeah, so today's not the day you want to wake up and want to be a hero. That's for sure. Another thing we're going to look at is what's going on in the news today. It's going to be a very interesting day. We've got some right out the door. This morning, we had the continuing jobless claims, initial jobless claims. That always comes out pre-market. More stuff this week. Yesterday were the ADP non-farm employment numbers, the S&P Services Global PMI. We had all that stuff yesterday. And today is kind of like the relaxing day in a way. Somewhat relaxing in a little bit until tomorrow's big day. So at the end of the day, we have some Fed speakers, but tomorrow is like non-farm. Tomorrow is going to be the day. Tomorrow is going to brutally rip your face off. I don't care which direction it is. I'm going to tell you what's going to happen tomorrow. Oh, don't forget to post a stream in Discord. It's going to happen tomorrow. You guys are going to get your faces ripped off, no matter what. No matter what direction you pick. Tomorrow, you're going to get your faces ripped off. Lucky for you, it's going to be pre-market. So if you would like to approach your trading station tomorrow with the skin of your face still attached to your skull, make sure that by 7:30 whatever in the morning Central, you are as what can I say that's not investment advice? Here, I got an idea. Don't get out of bed an hour early and start trading this market tomorrow. I do sometimes say you guys, but mostly I say y'all. Like I said, tomorrow will be a face ripper. I don't care which direction you pick, long, short, whatever. Chances are every one of us is going to get it wrong. So best case scenario is not, I think I'm going to buy tomorrow. And that's my generational wealth. I called the bottom and market's going to rally, and I did it. I did it, honey. I can quit my job. I did it. I did it, kids. Look. If we all won the lottery like that, none of us would be here still slugging it out. We learn through history of doing that and failing while trying to do that is that these are days you try your hardest to be as sidelined as much as you can. I'm going to show you when the monthly maps print out. We're painting abnormal volatility even for next week. If you thought this week was bad and the week before was bad, next week's going to get worse. According to the plan, according to the map is showing very unusual volatility. And we'll see if that goes away. Let me give you a little sneak peek of what yesterday's map looked like. The monthly map is looking 3 months into the future. If you guys have ever looked at Rocket Scooter's stuff, it's looking 3 months in the future. Now, the S&P did look somewhat stable as of yesterday. QQQ is where we're showing that potential craziness. Now, you got to use a little bit of your imagination here to see what's going on, and let me detail what it is we look at. I'm going to kind of show where the bull side is using green. I'm going to show the bear side using red. Okay. When both of these lines are sloping up, it is extremely bearish. And this is until March's expiration. So this is 2 more weeks. Number 2 is the space in the middle. I'm going to kind of circle with white. Now this is kind of the spaces, right? You can see that there is illiquidity, or liquidity pockets are really big and wide. This distance is like how much volatility you're going to expect. And even as far as the week of expiration in March, it gets wild. The idea that that space gets really big, normally you're going to want to see it 10 or 20 points apart. This is the average weekly range. The biggest one is the average weekly range, usually of the S&P. And you can see that these bigger ones leading up into the end of next week, I mean, you can't even measure how big this is. I mean, it's huge. There is no really solid bull zone in here. Even the ones that you can easily see is like S&P 515 to 500, or sorry, QQQ 515 to 500. Okay, that's 600 points. We're gonna have 600 point days in the NASDAQ, things like that. 600 point week, but the worst day could be 600. So it means up or down. So don't get in the habit of saying that means down. While the monthly map does point a picture of down, it still means any direction. Volatility can go either direction. Okay, so this is 92%. This is 8%. We'll close in that range. Hey guys, hit the like button. Yeah. We got 10 more minutes till we open. We get to that 200 mark or the screen goes black. Hit the thumbs up. Lean your house on tomorrow's trade. All in. Tomorrow is likely to do one of anything. Tomorrow can go. Tomorrow can go. Tomorrow can go. But with the potential that's there in this greater bear market, this extreme sensitivity that we have, extreme sensitivity, there is no guarantee that this market will not have a range that just becomes too big for your position, whether you get the direction right or not. Imagine with the S&P getting squeezed like 40 points before you were right. You're going to follow risk interval the whole way down. So imagine that and just keep in mind it could be crazy. So VIX is above this triple B white line right here. This is the one. 1637. So we're extremely sensitive to news and catalysts already. We know that. Even though we had yesterday's nice little kind of midday rally on a Trump, Trump chit chats, we're still VVIX 110. This is the VVIX. And the VVIX is very important to understanding, again, the sensitivity of the VIX itself, or the volatility of the VIX itself. So this is like the exponential sensitivity of the S&P. When this VVIX is above 100, the S&P will start to likely curve lower faster on repeated downside. So you'll be very careful. Today might not be the day to wake up and try to be a hero. And I'm glad that we're already seeing that. When you wake up outside of these lower bands, 2476 NASDAQ or 456 NASDAQ, already. It's looking pretty bad to the downside. One more time, guys.
Hit the like button. Rocket scooter. Yeah. Rocket scooter. Yeah.
Now, I don't bet on volatility. Somebody asked, is it good to buy VIX? I don't bet on volatility going higher. The one thing that I don't understand how people can do this, that I feel like you can't predict, is that the volatility is going to get bigger. Only the volatility you can predict that the S&P's range is going to get wider. But I have the hardest time buying volatility unless I know I'm leading up into some news or some event that I'm forecasting. Like, it's hard to predict the market's going to become volatile. It's hard to predict that people are going to start bowing out of the market and becoming... You're basically betting on the market becoming illiquid. Not bearish, not bullish, but just illiquid. And I don't have the skill set to predict volatility other than monthly map and VIX. I can tell you the positioning there, or liquidity maps, but as far as a general consensus, volatility is already here. To predict it'll get worse is a hard trade to make, personally. DD bands are updated overnight, Scott. The percentage of time it returns inside the DD bands when we open outside, 1 out of 3, Jay Mooney, not only go inside, But if it pops outside, we've counted about 1 out of 3 go all the way to the other band when we did our back test. Now I don't know what it would be currently now, but at the time we did the back test, 1 out of 3 days that patch or that poke through the DD band will go return to the other band. It should travel all the way back up. 1 out of 3. Well, this again, the small subset of data we counted, and we were like, wow, that's insane. So that's why we don't short or bet in the direction downside, because 1 out of 3 can rally all the way to the top. I think yesterday was an example of that. Buy one call, we'll put it closed. What's that? Lost a house. Kids, pack your shit. Honey, I bet on the non-farm payrolls. What happened? I lost it all. Why? Because the unemployment was much bigger than I thought. She's like, yeah, well, it's +1 more because your boss just called you fired. She didn't show up to work today. Hit that like button for Matt, hands down. +4. We need 4 more, guys. Most transparent trader on YouTube. Never watched Matt for years. DeAndre, thanks. Appreciate you, man. Possible buy on UVXY dips. I mean, on monthly maps and on the structure of the market, yes. You can always buy anything on the structure. I was saying in general, predicting VIX, I wouldn't be betting that volatility gets worse. Volatility, like, never wants to get worse. There's always buyers, and at some point, volatility, it's predisposition to decay. So volatility is like you got to catch it in very short waves. But it's just something I don't do because it's hard to predict illiquidity. Like, all right, 200 guys, I love y'all. Yeah. Those odds are the same when we open outside. These odds are not the odds of the bounce. These odds are the odds of where it closed total. So we count the number of days that closed outside, inside, and above. My bad. The music's too loud. My bad. My bad. Oh, well, that's the hit the like button music. That's just the music. That's just the normal music to get you guys hitting the like button. My bad. All right. So those are the number of days that we counted that close inside or outside, irregardless of what it did before or after. Breaks, not breaks, whatever. We just counted the closing days. We went through every single day, the closing day, inside, below, above, and just a total overarching stat of where it goes. Music can play in beat party. Can you show the red lines on SPY? 57.66. And that's probably like the more nearby one. And let's see what we got. Halo 2 was awesome on land in college. Oh, dude. I got a freaking... Hold on. I got this like gnarly ass scar on my knee. So if you guys can see it. Well, not... Actually, that's another... Wait, which knee was it? I forgot. I think it's this one. One of my knees has like this. Yeah, I'm like, it's almost gone away. But like, I was carrying a giant CRT TV to my LAN party at school. This is a funny story, and I'll bring up Alfie the heart surgeon again because he was part of it. I was carrying this giant, like 32-inch CRT TV to go to the LAN party. After we did our final exams, we'd always play Halo. So we would have like a Halo party in our little study area. And we would all just like, all the engineers would get drunk, get high, do whatever, and play Halo after our exams. So everyone would just like, it was like a party at our school. And everyone participated. Doesn't matter how nerdy or whatever you were. Everyone would come in there. We would have like, we'd bring liquor. We'd be making margaritas. And we'd play in Halo. That's all we did. And I was carrying this TV out from my dad's house to the car. I stepped in a hole in the yard, and I tripped and stumbled, and this TV like rolls out of my hand and smashes on the concrete, and I fall with it face plant on the concrete. I get scuffed up everywhere. My knee, I like ripped off a shred of skin, and I'm just like beat up and bloody. And I pick up these TV parts and I throw them in the car, and I still go to the LAN party. I wrap some bandages around me, and I show up, just look like I got robbed. And everybody was like, "What happened to you, Matt?" I was like, "I broke my TV," and I had the big TV. That's why everybody was like all disappointed, because I had the bigger TV. And we all sat there, and all these engineers are like sitting there with their tools trying to figure out how to fix the TV. Like the circuit boards are broken and shit. And we're all sitting there like, well, maybe we could do this. Maybe we could do that. Like thinking we could do something about it. Thing was smashed to pieces. I think they were thinking we could tape it up and somehow it would work again. But that was basically what happened. That's how much we loved Halo. I got a scar because of Halo 2. I forget which knee it's on though. I'll have to remember. I think it's on the right one. But it's like you can't see it anymore because I'm a little older. But like there's just like a discolored pink spot from where I literally ripped off a whole layer of skin. I was so determined. My dad was like, "You want me to like? You all right?" I was like, "Nah, Dad, I gotta go, man. We got Halo LAN party. I couldn't miss it for the world." And I show up completely bloody. It was so crazy. And then all my friends are trying to put together this TV. Like the plastic at the bottom was broken, so all the circuitry was exposed. And tried to fix it, but it didn't work. That was before the margaritas. Yeah, I stepped in a hole in the ground. It was like, you get holes in the ground all the time, I guess. Texas thing, I don't know. All right, let's go. We'll be very careful today being outside DD bands. We're not going to try to do too much. Let me make sure I get open all my trading stuff here. All right, we're good. Hold on, let me go here. There we go. The only possible setup is a long from that red line. That's all I can see, or a liquidity map thing. And with the market moving like this, I'm in no hurry to kind of be a hero here. The new resilience is the tiebreaker at hedge pressure, Tom. That's all it is. So when you get to the blue hedge pressure, it'll be your tiebreaker. So it's based on the weekly options, just like the monthly one's based on the monthly options. All right, so we've done a gap up. Oh, it's okay. So this is bear short down of a hedge pressure. Super simple setups today. We have this one here to here. If it retraces, that's a good one. Should I pop some micros off this lower red line? Let's let it overshoot though. Before I try to be a hero. Let me make this a little bigger because that 92% is like way up there. All right, let's watch Nasdaq as well. This market could completely open and collapse, so no heroes today, guys. And we're going to sit there and watch it, just sit here and watch it. Don't forget, guys, smash that like button, everybody. Let's get up to 500 people today. There's the Nasdaq pivot if there ever was one. We'll let her overshoot a little bit and touch it with 2 micros. Just 2. Why not? Just no 2 micros here. Nothing crazy. Nothing crazy. So this is resistance from here. There is nothing showing any kind of support here. Oh, look at this. So now we have a resilience for... What is a 0 here? This needs to go away. Oh, that's the 0 for the 0 line. I get it. Okay, he needs to move the order of this. So now we have a tiebreaker at the blue resilience. This here, I'm going to move that. The 0 is the 0 line. You'll be hero here. 2 micros. 2 micros, nothing else. Nothing else. That's it. Let's look at S&P. So that's QQQ, resistance off a monthly hedge pressure. Yeah, market's coming down. If it does pop, that's a complete selling pressure there. SPY is breaking through MHP, so we were above, but now we break below. I don't think I want to trade today. I don't think I like anything here. Put some micros on it just to entertain you guys, but no, this is a terrible day. Terrible, terrible, terrible day. Ooh, looking bad. Looking bad. Nothing about this one looks good. Nothing looks good. We get above MHP, though. We can nice little bounce in the S&P. So, again, we're in that weird transitional phase of the market. I kind of want to take like very little risk, if anything at all. I just have an iffy, weird feeling about this. Let's go ahead and a little bounce there. Okay, not so bad. Reclaiming MHP goes from here to blue. That's always one. Also liquidity pocket every single time trade. If it breaks through there, we go to there. So we have a new indication right here for resilience, which is the blue one now has a tiebreaker. And I don't know how we're going to incorporate this. We're going to learn together, right? This is saying if res is less than 0, we're likely to reject. So it's going to be a probability that we pass through, but we'll see how well it works, right? This is a whole new indicator for us. Long and right at the red line, like I said, it's not picking up a lot of momentum here. I'm going to close out. I'm going to let this die. It should bounce very rapidly. It's going to overshoot and play a little bit. I'm flat, fully flat. So we're going to wait on this one. What's up, guys? All right, everybody, smash that like button. Bottom right of the screen. Wait, you played Quake 3, Unreal Tournament, and Counter-Strike at LANs? Oh, all the time, dude. In high school, I invented a fake chess club and almost got in trouble for it. So that we can sneak into the computer lab and play Quake at lunchtime. Me and all my cronies. Like, the funny thing about me in high school, I was like, you know, I did very well in high school. My grades weren't that great because I was like the smart slacker type. I just didn't do homework, right? And a lot of my English teacher hated me, so she purposely was trying to fail me, I feel. I was too outspoken. But the thing is that, let me write on the screen what I'm going to do. But the principal loved me. It was kind of like a Mr. Belding, Zach Morris relationship. The principal was one of my dad's old smoking buddies from his high school. They all went to the same high school together. And so she was like, you know, really cool with the fam. I'm going to sit out down here, do nothing. I'm glad I walked out. There was some pick up momentum and it was struggling to hold. So anyways, I would always get in the shenanigans, but like cute shenanigans. And I always get kind of like that kind of, you know, shake of the finger sort of feel. And yeah, I was watching UVXY on the other screen. So VIX is pushing a little higher. Not really the best. So this is a set out day, guys, down here below. And again, there's no shame in sitting out. I was watching that as well. Like right out the start of the day, VIX was pushing higher on the open. I just walked. Markets get a little crazy, but if we do reclaim with some velocity, there is some, this is about 40 points of run. It's huge, but this feels like the day that's not going to happen. So what we're going to do is we're going to sit out today. We're going to sit out and we're going to let it do its thing. Let this market do its thing. This isn't the time to be a hero for me. Let it do its thing. Okay. The market moves like this. Let it do its thing. If the market somehow does this and supports, I might take another stab and then do its thing there. So we're like basically teetering on the edge of a crash today. With the VIX gapping and going, that's not the best thing for volatility. This market is likely going to move quick in either direction. So it's going to get worse, just like it did, you know, every other day this week. So this is not the time to be a hero, but there is some good eats here as this thing pushes. I tried to take the long at monthly hedge and I got out of the way when it didn't. It didn't pick up some velocity here. I take this trade every single time. There is an interrupt here at 57.77.5, 577.5. And now we have weekly hedge pressure, which is now tiebreaker here. The way that that works is that we, and I don't know what we're going to call this one because you have MRES, I guess WRES, WRES, less than 0. Let's see if this indicator is any good because we're just now testing it out. It's the probability, or it's the same weighted algorithm at MHP, but just on weekly hedge pressure. It looks at what all the stocks are doing, and when it's negative, then when we get to here, is it going to be like a leading predictor of what's a lower probability of breaking through hedge pressure to the upside? We'll see. Oh, I love chess, yeah. So in college, and so here we're looking here. Let's see if I can take a little, maybe I can probably tap a little longy long here. a terrible setup. All right, might as well. Take it. Let me see some Apex too. Oops. Okay. I don't think it's kind of getting a little oomph there. I'm gonna take a little few micros, nothing crazy here. We hold this level, we see if we get a little run. 3 micros, like I said, I'm just gonna sit out below. And it's gonna be volatile, but we are trying to test it, and I do like to take this every single time set up here. So if I can get a bounce on monthly hedge, that's great. Let's see if we can commit to it. I might as well just commit to it. There was that opening volatility. If we break 574 again, I'm just gonna be out for the day. But every time we press through this, the run is just great. That's 40 points on the S&P. It's definitely worth like possibly taking, you know. It's not like it's a bad setup. I think the market's just opening and trying to dump today. Jeez. Sent out down here. Small trade to there, small only. Let's make that $10, baby. Let's let her rip. Ooh, yeah, res is negative. So the new thing we're gonna do today is we're gonna test out. Like I said, it is not picking up momentum here. This is getting scary. Fingers on the button here. Yeah, selling pressure at the open is just dynamite. Yeah, that's crazy. Yeah. My original instinct was probably right. This one. See how quickly it can go? Like micros, let's say, just a handful of micros, nothing. I don't, like I said, I'm ready to sit out. I'm ready to pull the plug and sit out on this in a moment's notice here. $200, maybe $200. That pressure is nasty. It's nasty out the door. So you're playing around. Like I said, I want to reclaim this monthly hedge pressure if we break here, but everything down here is sit out, sit out, sit out. A rejection off of MHP is a solid short signal if there ever was one. So this is one of those days where the MHP is also right here. So the market, this red line that we have, is also where MHP is. So the market can get very brutal from here. I don't know if I want to take any risk. The MHP rejection is gross. I'm going to count to 10 and close the position. 8, 7, 6. This is a science technique. I'm literally counting to 10. 5, 4, 3, 2, 1. Reclaim it. Reclaim it. All right, that looks all right. That's that second tap, though. If it starts to drop really fast from here, look, it's MHP rejection at this point. Breaking MHP can crash the market, guys. Not good. Like literally, I am very, very, very worried about today's market. This is like building up signs of a gamma squeeze in the downside. This could be a crash. I'm out. Fuck it. I'm out. I don't want to deal. All right. I'm out. Volume decline. Volume's in decline right now, and declining candles. Declining volume, declining candles is a break. It's not a save. It's not a save. Yep. Yep. We'll take the short. Yep. We're gonna take the short. You guys are right. You You guys are right. You're not wrong. Let's figure out our R&R, though, on this one. How fucking good are we at this, guys? All right, 20,163 is that next short on NASDAQ. So 20,163. So look at the NASDAQ today. And I don't short down here either. That's the problem, guys. I don't like shorting below. I have a rule, no shorting below DD bands. So you guys are making me break my rule. Really, I have a rule that says no shorting below DD bands. I don't usually do this. So, but I was not paying attention. I was eagerly shorting off an MHP break. But this squeeze gets me so hard sometimes. So be very careful on this. No, there's that pressure is there. That pressure is there. MHP rejection is a market crash on a downside break. It's bad. So normally the rule is sit out, but I got to do something on the stream so that you guys can be entertained. If we reclaim hedge pressure, I'm backing on the long though. That's the thing. I want to be long this thing on this definitive break here, but we have declining candles with declining volume on this side of hedge. The market is weighing itself to fall. So this is just not the best setup. Play COD on stream. You guys want me to play Call of Duty? Y'all watch me game? That'd be funny. That'd be hilarious. Some people make a ton on live gaming. Yeah, probably. I've got nothing else on the table, guys. I just got this. That's it. I'm just goofing around. The rule is don't short. I know the market's going to crash, but crash today. It's a crash day today, guys. We're crashing out. I was trying to entertain you guys with something. So my rule is to wait for the long setup if it comes back. So, but here we go. We got a dip about it's about a 100 point drop if it happens. So not a bad move on futures if it does drop, but I do not short below DD bands. That's my number one rule. I don't do this. So with anything serious on the table, but I'm going to do something just to show a trade. This is because I'm streaming. If I wasn't streaming, guys, I would go out and have a good day today and do nothing in this market. So the rule today is I'm looking for something from here, but on this break here, I'm going to take the long. That's it. Like I said, fuck it. I don't want to do this. I don't short below DD, but let's just chill. Do I ever unattend my trades, like leave the trade and walk away and handle IRL like during the trades? I have issues with this. I usually don't. If I do, I'll have to make sure I like set stop losses, but I'm pretty much when I'm trading, I'm glued to the computer. I don't like to let go of the market, but sometimes I'll go and I'll disappear and go to the bathroom or something, and you guys will see me do that sometimes. Because I'm usually pretty confident in my trades. And I have people always make fun of me. They're like, he didn't even set a stop loss. He went to the bathroom, went to go make breakfast. You're like, yeah, that's how confident Matt is at a bear zone top. He'll just leave it. He'll just walk away. But that's temporarily. Like, it's still within my sights. You know, it's not like it's yeah, but we are going down today, guys. There's no if, ands, or buts about it. Pretty bad today. MHP rejections is kind of obvious. Below MHP, it's just gnarly. It's gnarly. So if we reclaim here, that's pretty good for a run up. But other than that, it's bad. Low consolidation below MHP. VIX on the climb. Yeah, we're falling, guys. This is a bad This is big days down, guys. Could be bad. It could be bad, but I'm not, like I said, there's no trade set up here to take. There's nothing to take. I like to wait for the bull side to manifest itself, and then I like to get on the long if it does happen. Something I will do. So if we break, this is my favorite trade, Matt's favorite actually, favorite long. Break only. Break only. We'll see what we got. Ooh. Looking good there. Trying to make a stab at it. This is not the time to... It's not the time to, like, take risk on this market. You know what I'm saying? Swish. Yeah, this is why you don't short below DD band, so... No, I've got no position on the table. Oh, wait, my Apex. I saw my Apex. I did long on my Apex. I haven't closed those out yet. But on the screen, nothing. It's a COD day? Yeah, probably. All right, so today, my favorite long setups off of here. If we do support the bottom, I'd like to take it. See, we get res is negative, though. That's the problem. There's limited upside today. I think that I really am, honestly, this is not the day that I think the market's going to rally up, so I've got zero desire to touch this one today. We know how these days pan out. So. I can always take the MHP bounce back to the upside. But that VIX, yeah, that VIX rallying like it is, it's just going to be an interesting setup. This is good. So if we break and we retest, so the 575 retest could be a long attempt. I'll plant some more micros on it again. But remember, anytime you break through into a bull pivot, let it retest. Always let it retest. Let that red candle come out of nowhere. Let this bad boy go to here. We'll let it retest. Res is very negative. I mean, limit upside is very limited today. Always let it retest. You guys know the rules. Always let it retest. Just here. Actually, that's about right there. The market's hitting that bottom pretty hard right there. Yeah. This is the one attempt for the market to save itself. This is a pivot. So this 575 today is make or break on the market. If we lose it, the market's going to collapse. Like literally absolutely collapse. We'd be pre-pricing in non-farms today. And I think that the market is going to experience whatever possible volatility it could have by pricing it in today. So again, whatever this level is right now, this 316 level, if we lose this, the market's crashing today. Literally crashing today. So let's be very careful. The market is on the edge of a crash today. Like Nasdaq 500 points of fall, 400 points of fall. The Nasdaq is on the edge of a crash today. Literally on the edge of a fucking crash. Let me tweet this so I can say that I did it. You guys are my evidence that I did it. Okay. The market is on the edge of a crash today. Hold on. on the edge, literally on the edge. Let me get the picture here real quick. It's like never been so close to being on the edge of collapsing. This is very bad if it falls. Very bad. Okay. So. Watch, let me tweet this before it happens. I can tell people, look at that. This is the edge. The market is dangerously close to crashing today. We're staring at the edge of a cliff at 575. You know what I'm saying? Like, and again, while I was saying, maybe I kind of want to short this on the rejection, like we're here again. I don't like shorting below DD bands. It's like one of the things I do not do. So we'll see. Boy, it looks bad, doesn't it? But it just looks so juicy. It's so juicy looking. Is this dip for billionaires to load up? Probably. Goodbye, market. Everybody salute the market. This was a great, we had a great run. We had a wonderful bull market. We did. It was fantastic. There's no news today coming out. This market is dead. Guys, it was nice knowing you. Let me close out the Apex. I attempted the long at the Apex. It was lovely market. I had a great time knowing you. F to pay respects. This ain't good. Not good. It would be a very interesting day to see this turn green and go. I'd be excited to see that. I don't want this market to die. I don't. But we know the rules. We don't trade down here. Let it do its thing. All right, so about 163 at the bottom on NASDAQ today. Are you guys trading this? Are y'all shorting? Are y'all longing? What's the deal? Y'all doing anything here? Let's take a poll. What are we doing? What are we doing? Goodbye, Sleepy Joe market. Hello, Trump's volatile for the first quarter. Bullish for the next 3.75 years. Victor just saying free class. He's going to manifest it. That's how it works. You guys are shorting? Yeah, you guys can feel it, right? You can just, like, you're learning, you can feel this market. Unless Trump comes out and says something in the middle of this market, it is trying to sell really hard. The market's going to fall pretty hard today, probably. But if we recover monthly hedge, this is great. Resilience is negative, so the box is resistance. We broke through MHP. MHP is resistance. It's going to take a fight to get higher, but we're not seeing anything. Can you feel the pressure, the hedge pressure? Feel the pressure. Come play the hedge, I'll test ya. Come on. Come on. Market, it was great to know you. Those are the guys that are here that want to know how I know this. There is a 10% chance that we break through monthly hedge. When you break through, it creates what's called a gamma squeeze. This is going to be a gamma squeeze. This is going to be a market crash. Good luck, everybody. Gamma squeeze to the downside. The market is literally going to crash today. So we can tell this coming from a mile away. I tweeted it just to say that I saw it, right? But this is, be very careful today. I tweeted it. Try to be first on the call. Be careful. If we break 575, the volatility should expand rapidly. So this is good. We want to see the market not crash today. It's right on the edge here. So like I said, I got no risk on the table. No, we're not doing nothing. We're waiting. A little bit of interesting move here. I don't know if there's something in the news. So let me double check. Like I said, it's going to take a rescue candle to come out of nowhere to save this market. The momentum is absolutely to the downside today. So this is good. This is good. We want 575 to hold. We want the market to be bullish, don't we? And we want that. So a little bit of safety volume came out at that previous day's support to kind of hold this market up. So a little bit of craziness. So let's see, right? 575 is good. We could be trying one final time to get in there. But boy, these stocks themselves are not at all rallying. The stocks are dead in the water. So whatever this was is probably a final ditch effort. So we'll see. I don't know. What do you guys think? This is where the market dies. This is the moment. Thought you said it was just crashing today? Yep. If you break through 575 and do not hold, if this level, literally this level right here, does not survive this last little candle, it's bye-bye market today. Yep. On the knife edge here. So out of the blue, random volume came on. It says on the edge of crashing. If we lose this 575 with any kind of volume, the market's dead. And the volume has come up right now to actually sort of push this the other way. There's some kind of rescue attempt right here. Covering shorts, whatever. But yeah, it's on the edge. Some data came out. I don't know what came out today. I don't see anything come out. Let's double check. Nothing really happening right now. Market is deciding if it's going to crash or not. That's what we're waiting to see. If it falls and loses this level, the gamma squeeze potential is massive. I'm talking massive. I'm talking 400 points of NASDAQ massive. You guys need to have a little faith. I don't want it to crash, but I'm doing the smart person's thing. I'm sitting out. It's so on the edge of such a drastic move in both directions. It's not that predictable. The correct trade would be to take the bet to the long side if we do survive in any of this right now, which is good. That's what I do want to see. Which I'm happy to see something like that. So, gamma squeeze if we lose this right here. So you don't want that to happen. So it looks like the market's trying to prevent this from happening going into tomorrow, which is good. Now, again, doesn't matter what I think. Just don't trade this nonsense. Let the market be stupid. And you know what I'm saying? On the edge. And it looks like we had volume come out of nowhere. Now, tell me that anybody can predict this. Nobody can, right? Volume in decline, market's trying to fall, and then volume comes out of nowhere to attack and push this higher. So this is something nobody can predict, right? But we know we can't predict it. We don't trade it. The smart thing is knowing when to act and when the market's predictable. And the dice rolled the other direction. We didn't have the crash today. That's great. So how am I reacting to this? Nothing. Same thing. Just sitting here, just waiting. Just waiting. The wholesale inventories came out for January. Wait. Oh, I'm on the wrong day. I'm so sorry. I was like looking at this and wondering what the hell I was looking at the wrong day. Yeah. So the wholesale inventories, that's what came out right at 9, right? So that's my bad for not paying attention to the news. My bad, yeah. So it looks like we had a reaction on the wholesale inventories. Not sure if that's going to really mean much to the market, but that's pretty much it. So market's saving itself today. Looks like we're good. Hopefully we stay good. Like I said, this is in the no trade zone. Nothing to do here. No trade zone. Nothing to do here. Just wait it out. News rolling back on tariff pressure. That sounds more like it. James Weston explaining the reason for not shorting when it seems probably for crash is so high. James Weston, you just saw the reason for not shorting. Because you can't predict the market crash. You can only highlight where it's going to happen. You can't predict if it's going to do it or not. So, again, a dice roll. And the reason we don't short down in here is because 92% of days close above the screen band. There's an 8% chance it just keeps falling. So the odds are really small. So we don't bet that it continues to fall. We just know where it's possibly going to happen if it does. That's it. StopStep a good trading platform? It's not bad. I like it. The platform is good. All right, let's check out what the business loans won today. Hello. 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 I answer the phone and I don't sound like I'm 90 years old and they hang up. I need to answer the phone like going forward like, hello? Are you my grandson? Is that you, Thomas? That guy actually had an American accent. That's interesting. So, James, you answered your own question. Why we don't short from here? Because we don't bet on low probability moves. That's it. We don't. Here's the first interaction we have with hedge pressure, with now hedge pressure resilience, to see what this actually does for the day. Let's see if that does anything. We put together a hedge pressure resilience just to see if the 250 stocks that have weekly options actually make some sense here. So this is hedge pressure resilience, which is negative, which should be a tiebreaker here to helpfully. So it says about majority of the stocks themselves are below hedge pressure, and that's kind of what we're seeing. So the reason you don't short below DD bands, and again, this is a very, like even when I was just goofing around with it, like literally says no shorting in capital letters, no shorting, because the 8% chance we close below. It's just such a low probability move. So markets don't want to crash. They can. We just know where it could be, and then I just don't bet that it happens. I just kind of wait. But it was looking like it was about to die until we had random volume come through and save it. So from here, like I said, there's nothing. I always tell people, like, what are you guys doing? Just see what y'all are doing. Nothing. You don't have to touch the market every moment in time. You don't have to trade. My signals are sit out. My signals aren't that great today. And, this could rally all the way up here. We don't know what this day is going to be like today. But I'm going to tell you, you don't always have to be making trades. That's the truth. Short on MHP QQQ. Let's double check that. That is a potential short setup at MHP QQQ. Yeah. Which is lower DD band. So again, at this interface here, this is resistance pressure, as we all know, trade number 4. You're waiting for COD to finish the update? Ooh. All right, so how many Ninja Turtle skins have you guys bought? That's my next question. That's like my real question for you guys. All of them? There's a reason I bought all of them too. Okay. Because I'm still grinding out camos and I gotta do all the diamond unlocks, and it's so much easier to unlock diamond on melee weapons than it is some of these shit guns that they have. So, you know, there's some, like, I've gotten almost all of them unlocked, so I'm trying to grind out the, you know, all your camo stuff. You know how Call of Duty works. And some, like, I've done it all I've done all like the SMGs, LMGs, and then all the assault rifles. Okay, I'm good. But then, like, you know, I'm not gonna go out there and try to get like 100 headshots with a shotgun. I mean, that's like ridiculous. But it's so much easier to grind out your numbers, right? With the, anyways, long story short, game is the skins for Call of Duty, the new Black Ops. The themes are just ridiculous this year. They had a Squid Game theme. You can buy all the Squid Game stuff. Last season. Just grind it out in hardcore. Yeah, that's true. That is true. I just don't have time to grind out. I like to actually play the game and then grind out while I'm playing the game. But no, seriously, I bought all the Ninja Turtles because I originally just got Donatello, but then I was like, whatever, I'll just buy the rest of them. Well, y'all want to play after this market just kind of like shits on itself? You guys want to play some Black Ops later? I'm down. I'm down for it, guys. I'm cool with it. I was staring dangerously at the edge of a crash. Like, seriously staring at it. It's bad. And the mechanism today is that we're likely going to move right here. And then Nasdaq's going to have that MHP rejection. Like I said, if the market just walks its way up today and today's that big bull up day, then we missed it, then we missed it. But the idea today is that I want to trade inside these bands. The DD ratio less than half, but any break of this is really good. So we can get the crash to the upside. Crash can go both ways, by the way. I'm not. This is like in my no trade zone. I have really strict rules on when I do attack and don't attack this market. So Weeble good to trade on. Weeble's not bad. I like Weeble. What's the difference between dynamic hedge pressure and MHP? MHP is based on monthly options. It's a separate pivot than the weekly option. So hedge pressure is based on weeklies, blue, and orange is based on monthlies, gold. What game modes I used to play? I usually do, honestly, I don't pick certain game modes. I usually just play the small map mosh pits. But actually, most of the time, when I'm not doing grinding, I'm actually playing ranked play. I'm grinding out Crimson right now. I haven't played much ranked this season though. I made it to platinum last season, and I didn't, like I said, I don't have a lot of time to play, but I have two dudes that I run with that are both Erie, so you know, when we play together, we basically just steamroll kids. They play a lot more than I do. All right, hold on. Let's go to hold on. Let's go to everybody go to Discord. There's a gaming channel. Go into our Discord, go to the gaming channel, drop your Steam ID, and then I'll add you guys. Maybe we'll run some squads in an hour or two. This market's going to give us nothing fun to play with. Nothing fun to play with today. It's trying to move, though. First time to see weekly hedge pressure resilience, so this is nice, the blue line. You can't see the orange line. Oh, is that a glitch? Is that just me? Is the orange line there for you guys, or is it just me? The orange line is not there. This looks like it's just me. Black Ops 6 makes you rage so hard. Oh, that's hilarious. The idea is it a good indicator to use? Is it good enough? Can we see anything from it? There's only 250 stocks in the S&P that actually have weekly options. So believe it or not, not all the stocks have weekly options. So because half of them are missing weekly options, we won't have all 500 companies represented in this blue line. However, because it's market cap weighted, the belief is that the bottom 250 don't even matter. They don't even move the S&P at all. So it's like we have all the juice of the S&P, all the meat, but none of the sides, which is okay. Because the S&P typically moves just on the meat alone. You know, the top 7 or whatever. Where are my shorts? The ones I'm wearing? The ones we sewed up? Oh, they're in the other room. All right, I'll be right back. I'm going to go to the restroom real quick. So good to see that the market's not collapsing today, but that's good. Like I said, not a good trading day. I'm not doing anything. Let the sky just kind of simmer. There's that first rejection right there. So this is the MHP on QQQ. Remember, from the start of the day, I'm just like, this is not a good trading day. Not going to do anything. Not going to trade it. Not going to touch it. Just let it do its thing. No, it's a dice roll. The market's literally staring at the edge of a cliff, and then it just randomly news comes out and the market goes the other way. It's coin flipping at this point. He said, that's why we don't short below DD band. That's one thing we don't do. We don't short down here. Just the rule that says no shorting. It's in the flashcards. Door is magically... Dude, there is like... That's so creepy. That's why he's opening my door. Rule here, no shorting. And somebody says, even though it looks like it's going to fall, why do we not short? Statistically, it's just a terrible place to short. There's no reason to do it. Right here. No short. Oops, sorry. No shorting. No shorting below lower band. Literally no shorting. Like never. Never, never. Never, never. The rule is never. Because the market has a... Only 8% of days will close below this band. So while we are finding support inside of here, this is likely to probably end up down here. It's probably going to happen. I don't think this becomes this today, but even if it does, then it does. Today's not a day I really want to be trading this market. Trust me. This is a day I'm just going to kind of chill and wait. Hopefully you guys understand that as well. Collapse schedule for Friday. Yeah, we're probably making room for the movement on Friday. But like I said, volatility is volatility, and the market just move up 200 points, 200 whatever points, nothing. I've got no risk on the table, nothing. This is not a good market to trade. Your favorite small map is Stakeout. Stakeout is great, man. I love it. Your aim isn't good enough to play ranked. Ranked is pretty tough. Call it like ranked in most games is easy, even if you have crappy aim. Like, Call of Duty is different than most games. It like requires everybody to just be really good at the game because like there's no, you just basically gotta, you aim and pull the trigger and the person dies. That's literally all it is. And there's like other games like Halo was like a dogfight, you know, it was like, you very rarely were like shooting somebody by yourself. And it was almost like you had like, da-da, 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 and that was like the pace you were shooting. But the idea was positioning. Halo was all about positioning. If you were smart, you were better than the other team. If you could position well and cover your friends and move as a squad, that's how you would win games. You didn't have to have the greatest aim because you guys would just team up and shoot people. Call of Duty, it's like, and they're dead. It's like a, you know, it's a game for like spastic little kids with ADHD, and I'm that kind of kid. You got it. It's like you spawn, you die. You spawn, you die. You spawn, you die. It's like that kind of game. How about shorting here? I have a rule, Greg, no shorting. No shorting at all below DD band. So in this particular case, there is one possible rejection point from here. This is always a short setup. The problem is that I don't like to be short down in here. I'd love for this to take place up in here, though. So the reason I don't short down in here is because of shit like this. There's a statistic that this does not sell off. Well, I always like to alert people this is where the edge of the crash possibly is. I don't bet on it, right? I just kind of sit on the sidelines, and if it falls, I'm like, hell yeah, like I missed it, right? So in general, those of you that are actually trading this, you know, if the market rallies, this is kind of what you want to be. You want to be on the sidelines in case the market does rally. So the idea is that what I don't look at is like, okay, should I find a short here? I've already decided that I don't like this day. Random ass day. We open up irrational. The market is just trying to trade lower. Just looks weird from the start, and all of a sudden pops right back up. This is very unpredictable today. This is not like a good day that we have that gives us any good insight about the market, right? Is there a short setup right here? Absolutely there is. But the problem is it goes down into the territory that I don't want to be short in. So from here to the downside is a really good short for those of you that don't have rocket scooter rules. So I'm not telling you guys to do anything. I'm not shorting this, but if there is a short, it is from there and nowhere else today. So on the S&P, that's where we had that first rejection point, but the S&P squeezing higher is not a bad sign. Curious to see how the edge pressure resilience is panning out. Yeah. You dropped your RP market. Yeah, I know. Ugh. What do you guys think about today? Okay, so this is the attempt. The one I said if there is a short, it's from here. That's the one we talked about. This is it if there is one. Again, I don't take it. But lows are in. Pull back his Bible, in your opinion, for today? Yeah, probably. But the thing is that this isn't a weird, untradeable region for me, so I'm not trading either side of it. I feel like this is one of those days that it's kind of better just to kind of sit out. So why not jump in the long? God, you guys are fucking degenerate gamblers, bro. I love you, futures. You know I love you, F2. Baby. You guys know I love it. Why not jump in on the short? Why not jump in the long? Baby. I love you, fucking G-Gens, man. Y'all got itchy trigger fingers over here. Y'all are testing my patience. I'm scared. I'm too scared, man. F2, save me. Give me a hug. I don't want to touch it. Too scared today, man. I can't do it. Somebody says we jump in on the short. I'm like, you guys got to, did somebody say long? He's probably right. He's not wrong. But I'm just worried, man. This is the market. The market can sustain a decent long setup from the bounce on this one. So he's not, I'm just messing with my buddy here. But this guy can bounce and go right there. Patience doesn't pay. No, today the market is just abnormal and behaving weird. It was staring at the edge of a crash, then random volume came in and pushed us up. This doesn't feel mechanically like a rally. We have rejection off of MHP, which is common to be selling off the market. That's why I'm sitting out, because I'm not betting on the bull break today. Like, I'm betting on everything collapsing today, but I'm not taking the bet, so I'm sitting on the sideline. Who said we're going to fall today? Come on, man. There was a gap to fill. We dropped to Harpy market. Gaps don't want to fill, though. That's the thing. A gap filling is just you guys finding patterns when there's not there. Gap doesn't technically want to fill. There are more gaps that don't fill than there are gaps that fill usually throughout the day. They usually fill on other days. But within the day, it's very rare. Sorry, not very rare, but not very common to see like a gap. A gap moves because that's a new liquid spot. Gaps don't want to fill. Today, we have a gap fill predictor that's telling you like the S&P and QQQ, here's the gap to be filled. Today's gap doesn't want to fill. This white line is telling you it's not. Watch this indicator, bro. I'll show you. You'll like this one a lot. This is a fun one. But in general, there was the downside gap. There was that one, right? Is that one you're talking about? Do I look at order flow for better entries? No. What I do is I look for markets to open rational. I don't like to see markets open this far outside of these bands. The screen band is kind of like your structure point of futures. The fact that we open like way down inside of this, I just have very, very cautious approach to this kind of market. This one's a little different. So the way that this works, you guys, I'll show you really quick. So the greater market is all bearish today, not that bad, not that good. And then down below the screen band, there is no shorting. I don't short down in here. I do longs only, which I do off of strong pivots, which I find. We didn't really have one that was nearby. NASDAQ has a strong pivot here. The S&P did have one that was pivoting off of. So the S&P strong pivot, which is the setup, I did try to initially take this long, and I scared myself out of it. You guys, remember my trade here, I actually right out the door grabbed like 3 micros here. Okay. This account's down 42 bucks. So, yeah. 80% of 80%, what are you talking about? It's all bro. It's all levels, bro. Don't overcomplicate. I don't know if you've ever heard of us before. Ask people in this chat about statistics. We actually created all these statistics that most people use and quote these days. And 80% of gaps don't want to fill. I can tell you, gaps don't want to do anything. The market, when the market gaps, is a protocol. You know, let me ask you a quick question, bro. Do you know what causes a gap? Let's ask if you know what causes it. Let's see if you know, because I'll show you. I'll share you something that'll help you with your analysis. Weight loss. That causes a gap in my belt loop. Yeah. Do you know what causes the gap to begin with, like day to day? A lot of people just look at charts. They don't really know how this stuff works. Doesn't matter much. You can see the chart and see clear bounce rejection. So you don't know what causes it. All right. I was just curious if you knew. So you don't know. So what causes a gap? It's okay if you don't know. I was new once myself. So let me explain one thing that's interesting. So at the start of the day, this is a cool lesson. And I didn't know this either. I used to just look at the charts too and look at levels and whatever. But let me tell you something that's really neat about this market. So up until 10 minutes before the market opens, right? I'm just going to put the words 9, 20. Market makers will accept orders called MOO orders, okay? You have a submission deadline, MOO. So essentially, you basically just tell the market maker, I want to buy or sell at the open. That's it. You see the open has tremendously high volume. You can look at futures or anything. The open and close is typically the two highest volume points on the map. That's from this actual process. It creates a protocol. There's a protocol where anybody can say, I want to buy just at the open, and then you get filled at the open. They collect all the orders in a basket, and then right when the market opens, the dealers will choose where to fill all of that based on two things. Number one is the order imbalance between the buyers and sellers, and number two is the distribution of orders on the level 2. They move the price to the most liquid spot. The most liquid spot is the most balanced spot of the day. The market always opens at a balanced place. That's it. It never opens imbalanced. 100% of days open at a balanced spot based on the MOO process, and the dealers just open the price there. Because the market today, as an example, we closed here yesterday, and the same process takes place at the close too. It's called MOC. And what happens at the close and the open is that they're both liquid spots. So liquid markets don't want to do anything. As a matter of fact, market makers, ask anybody you know that works any kind of liquidity provision or whatever, market makers or anybody that's running markets, liquid spots hold. They don't want to move from the liquid spot. It's like instantaneous illiquidity that'll move the market, which you can't predict, like illiquid markets, right? So what happens is this is a liquid spot. This is a liquid spot. The market can run to there, but the odds are not 80% at all. There's no, it's more like 50-50. The idea that the market moves from one liquid spot to another liquid spot. These are both liquid spots. And I'll prove it to you because every time you touch this bottom line, there's high volume and it's predictable. That's the liquidity at the open. So liquid spots don't want to do anything. They want to hold, and which is what you saw for about an hour of them holding. So the idea is that when it moves there, you can't say, aha, it wanted to fill the gap. It actually doesn't want to. The market makers will do anything they can to actually hold it. That's actually the protocol. They don't want to move the price anywhere. They just want to keep it wherever it's liquid. That's why they chose to gap it there to begin with. So gaps can fill, and that is a pivot when you touch them. It's predictable high volume when you do touch them. But people are asking, like, you know, which levels or whatever you're trading. Yeah. But like the point I was just telling you guys is that, like, be careful thinking that, because like a lot of people teach like this kind of stuff, like the gap wants to fill. I'll tell you, the gap wants to hold more than anything. Like, we have a gap fill predictor, and watch this line right here. This white line below 0 is telling me that the market has a higher probability of actually selling from here than filling its gap. Now, I'm not taking that bet, but the stocks themselves have all gapped down and have rejected their half gaps like that. And the S&P is the one that's rallying. So what we do is, since the S&P is following what the stocks are doing, we have an indicator that can tell us what the stocks are doing. Right now, the stocks are not filling their gaps this way. So for instance, QQQ trying to rally, the S&P is not, or sorry, the S&P and NASDAQ stocks are not filling their gaps. So what we do is we watch all of them together to see when the S&P and QQQ open at a liquid spot, the stocks themselves are not rallying to go with it. So the index popped up and the stocks aren't moving. This is likely the path today. Okay. So what you really need to do is not say that the S&P or NASDAQ want to fill the gap. They want to track the stocks in the basket. And so if the stocks themselves aren't rallying, it's hard pressed for me to take the bet that the index will go if the stocks themselves aren't. So the middle of the gapping range is called the half gap, and it's inside of here. So we kind of like wrote the book on gaps, and this is like why I like to teach this stuff. And so in this particular setup, the half gap is very important as a strong pivot in this market. if just this indicator right here, it's called resilience, res greater than 0, in most rational markets, you will see the S&P, the gap down, attempt to fill its gap. But in the case that it is negative, the probability is higher that it goes down this way. I love teaching this lesson. This is a fun one. But I know it says, like, if the market goes, it probably goes there before it pivots. So gaps do create, or opens and closes and former gaps to close do create great exit targets. They do create high volume. But the market is not like seeking, let's go fill that gap, unless there's an illiquid push to find counter volume. Then it'll seek it out. An indicator like this is telling you there is no illiquid push in the stocks. The stocks themselves are comfortably sitting at that low balance point. The index just rallied higher without the stocks going with it. So we're kind of sitting at that low spot on the stocks. Yeah. Trust me. Too complicated? Well, you're talking to like a futures trading world champion. So there's a reason I'm the champ, and there's a reason you're watching me and I'm not watching you. No offense, but complication leads to success. Understanding how something works. If it's all just levels, bro, then that's cool too. You do your best, man. Like, you know, you do you. You do you, man. So in this particular mode, there's no reason for me to put any risk on the table. So what I'm going to do is I'm going to go watch. The market has reacted at these levels. Well, I mean, you're stating the obvious. We all can see the same thing. The market reacts at anybody could say the market's reacted at a level. I mean, you have to show a level of like, how would you handle a position? Which direction would you go? Like, the point is saying is that the market doesn't want to, it doesn't desire to fill a gap. The S&P is not doing anything other than tracking the stocks underneath it. That's the goal of S&P futures and Nasdaq futures. It's an index that's tracking stocks. So like, it on its own does trade, but it mostly is tethered to the things it's tracking, right? So that's kind of really what it really does. You know, I don't even understand what you're trying to say. It's there. You're trying to say that the market, I don't know. I still understand what I really don't understand what you're actually trying to say. That's kind of like why I'm confused. That the market's reacted to something. Like what am I trying to learn here? I'm trying to be like really like, you know, on your side here. What am I trying to learn? What are you trying to teach me? That's why everyone here is confused. What are you trying to teach us? It's like when you say it's all on the levels, it's all on the charts, it's all on the charts, bro. It's like, oh, I don't understand what that even honestly even means. Does Bookmap have any relevance to how you trade? So Bookmap is a great indicator of aggregated volume at certain levels, which is great. And so we give you the levels, and you can use tools like Bookmap to give you kind of that analysis at those spots. So like I would be pulling Bookmap out and seeing what happens at MHPs and HPs and things like that. When somebody's kept trading super simple and repeatable at key levels, you have been profitable. I like that you say that, man. Like I said, you're talking to somebody who competes in global futures trading championships, and I've competed. I've been top 5 in the Robbins Cup. I won my last trading competition I did in futures. Like you're kind of sitting on the sidelines telling LeBron how to dunk, bro. Like it's okay. I'm glad that at your high school you were a great basketball player, bro, but you're literally talking to LeBron at this point. It's cool. I appreciate your advice, man. I really do. I do. But, you know. Dear handsome, you give up your option up or down, please. No. Sit out. I ain't touching this today. Look at the chart, lines of colors. It makes shapes. Be nice, guys. Y'all are too mean. All right. Hey, a glimpse of the future of the prop firm trading world moving forward from your meeting yesterday. So I mean, okay. So, you know, I had a meeting with Brett Simba yesterday to kind of chit chat about some things, and everybody's waiting to hear like, what is the big reveal of like what's going on in the prop firm world, like big regulations, big changes, whatever. We didn't talk about that. I'm just going to tell you that. But what he did tell me, I'm not going to come out and like spill the beans on, but they have some big plans on what they're doing over there, which is good. But we didn't talk regulation. I promise you, I don't have any inside information about that. I just have my own theories and speculation, but we didn't talk about that. It's kind of one thing is that I think when traders get uncomfortable and they watch like a trading grandmaster not trading a market because it's predictably unpredictable, people get uncomfortable because, you know, they just don't understand your choice to sit out. What year did I win the Futures Championship? I did. Oh, I do a bunch of competitions. So like last year I competed in the Robbins Cup. I peaked in the top 5 and then I fell off the top 5 and then I sort of just like lost interest in it as time went by. I found out that all the people I was joining to beat actually didn't even, I was joining to like beat up on some influencers just to show I was like the best one on YouTube. And there's really all the people that said they were going to enter didn't enter, and they were all lying about it. So I was like, well, why waste a whole year of my life competing against nobody? And so I'm pretty sure I closed in the top, probably in the top 20, top 10, even giving up halfway through the year. But I did a trading championship in October of last year and got first place in that one. It was hosted by ETF. What about entries? You have location, great, but what about timing of the entry? What do you look at? So when I do entries, this is what I do. This is a sit, guys, this is a sit out day. Like, get used to seeing sometimes you're going to see people choose to avoid a market day. Y'all are used to watching people that are degenerate gamblers. Like I rock like an 85% win rate. I don't touch everything in this market. Like I maintain a high win rate. You guys are going to watch magic if you watch me trade. Everything I do is very systematic. So entries, right? So I have high volume pivots that are really good to trade off of. This is one of them. This is a great long pivot to take. It's also a great, you know, resistance pivot on the downside. I don't short underneath these bands. That's one of my roles. Hold on. Let's hello? 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 Hi, Kevin from Quick Capital. How are you? All right. Oh, I need $60 trillion for my business. How is that not possible? You called me. Wait, hold on. How's that too much?
All right. Thank you.
No, wait, no. Can I have 60 billion? Hello? Hello? You'll take a loan now. You'll take a loan. He was like, he's like, that's not possible. What is that? Ooh. You want the business loan? One of those are tasty. The caller ID always says hospital. You got to answer it. The one day I don't answer it, like, you know, my mom broke her foot or something. You know what I'm saying? So what I do when it comes to pivots, here's how I look at it. Right? I have the pivots, I have the range. So remember, today's a sit out day. Like, don't let markets tempt you into behaving. This is a day just to not touch the market. That's what I'm saying. Not every day is a predictable movement day. This is an unpredictable day, but I know it's not predictable because I have rules that tell me that. So I don't really have a lot of behaviors that I'm going to do all the time. You have to get used to watching. The best traders in the world are going to have the best market avoidance strategies there are. I maintain an extremely high win rate because I don't touch the market every day. This particular day isn't it. So what I do on my entries, right? What you're looking for is when you hit a high volume pivot. This is a high volume pivot. This is a high volume pivot. And so what I do is whenever you hit the pivot, there's two things that you have to ask yourself. Number one, are we in an alarmingly high volatility state? We have indicators that tell you that. What's the volatility like? I'm going to write this word down here. Volatility, good or bad. If you have volatility, and again, there's a certain conditions that we add this. So the volatility is good. I usually attack the pivot pretty much right at the pivot. I'll just throw in an entry and I got a pretty tight stop. On the S&P, it's 10 points. On the NASDAQ, it's 40. Okay. And that's it. And I usually attack right at the pivot. The market will usually pivot really hard at those levels. It'll fall and hit that level and pivot V up pretty quick. Like, so in an advanced volatile state, what happens is the market will usually approach the pivot and then play around before it decides where to go. And there's exactly what you see today. So if I were to attack this pivot on the long side, what you do is you take there's a rule that you look at your 1 minute candle. So this is how you do it. So yeah. So you take your 1 minute candle and you go into futures and you look at the worst, biggest, craziest 1 minute candle in the last hour. So of the last hour is probably this opening candle, and you measure how high, how low it was. Like 315, 261. That's 55. Let's round up to 60 points. 60 points of candle. So that 60 points is about how much oscillating volatile range you can expect to have in futures and overshooting of your pivot. So on QQQ, let's just kind of find the same spot in QQQ. Trust me, it's all in the charts. It's just a numbers game, bro. But you have to do this. 60 points is about 1.5 points on QQQ. So 1.5. So we opened right here. Literally right here. 493.7. And 1.5 lower is 492.25. Okay. And that's about right here. And as you see, the market was volatile and oscillating that distance. It's a great rule of thumb. Your biggest candle is how much overshoot you expect to have on a pivot. So when you're counting for high volatile state, which we are in, we teach people to split up your bet. You're going to long, when you're approaching your pivot from the top, you can long very small and then put your longs around the pivot up to that distance. And then you're going to stop your normal 40 points below the last one. So the idea is that if my normal stop is 40 and the volatility is 60, then I need to trade a smaller position than I normally would to account for that volatility. So example is I normally was going to do 6, I'll make it easy, 6 contracts. Or, yeah, well, actually, if I do 10 contracts was my normal. And I'm expecting 10 contracts at 40. But if it's going to possibly move 60, then what I'm going to do is I'm going to give myself the ability to take 50% more drawdown. So I'm going to trade a little bit smaller. So that roughly becomes a 7, but let's make the math easier. Let's pretend that this was 80, and I normally would do 10 at a 40-point stop. 10 at a 40-point stop is the same as 5 at an 80-point stop. So what I do is I reduce my position size equivalently to how much extra oscillation we have, so I can take that same drawdown, and my total loss is the same. If I'm in a non-volatile market, if I were to hit 10 contracts here with a 40-point stop, that's the same thing as playing with 5 and having 80 points of oscillation. And so it's the same amount of total loss, and that's how I manage a position. But in days like this, you can just choose to sit out. That's like the smartest thing to do. And it's not like, oh, you don't know what you're doing. You're saying, I know exactly what I'm doing. I'm the best trader you'll watch live trading by a long shot. There's not even anyone close to having technique like I do that streams that I can see. But I'll tell you something here. The reason I do what I do is because I like to win. That's it. That's it. And I win a lot. I don't like to lose. I don't like to play. But I do have very meticulous rules that I follow. Yeah. To show them the flex chart with the tweets, I don't need to be. I'm just saying is that when there's a I thought you said was gonna crash, bro. That was easy to see. I just longed at the gap fill. It's you're just flipping coins. I mean, everyone gets it right every other day, but I know you're flipping coins, so I avoid something that's 50-50. That's how I trade. I don't really have to touch everything that moves. So this wasn't a predictable move. The market was staring at the edge of a crash. The last thing I want to do is take any risk of this. As a matter of fact, by the end of the day, we could be down in here for all I know. And the idea is that I know that this is a very dangerous day to trade on. We know that MHP is very strong resistance off of this. And the market could collapse from here. And it's not my job to guess in these irrational markets. My job is, here's what I'm going to tell you guys I'm going to do. Y'all want to watch this? I want you to come every single day. I'm going to teach you something I'm going to do. Here's what's going to happen, right? The market is going to continue selling off through May, through April and into May. And this is what you guys are going to watch me do. You're literally going to watch me be the first bull in the trade when this shit bottoms out late March. Sorry, in April. Maybe early April. And you're going to watch me make millions of dollars on the way up. On the way up. While everybody here is picking up pennies in front of this fucking steamroller, I'm going to be the person down in here. So, right. Picking these tiny little technical, forget this. I'm going to have money in my pocket when we hit that real bottom. And you're going to watch me make a fortune on the way back. But don't, when somebody said expect the gap to fill, don't expect a gap to fill. That was the question. It's incorrect to expect a gap to fill. Gaps don't want to fill. Gaps actually want to hold more than they don't. So to say, so when somebody teaches bad information, like the gap wants to fill 80% of the time it wants to fill, that's not true. There is no, like 80% of days do not fill their gaps. This is not absolutely true, especially in irrational markets like this. So basically saying the gap wants to fill, then 80% of the time we'd fill this gap. That's bad information. So don't listen to bad information. It's roughly 50%. There's no correlation if the gap's going to fill or not. The stocks are not filling their gap. The probability is more like 80% it doesn't fill the gap if there was one. We don't have a probability on resilience, but it's very likely that this comes down from here rather than up. And everybody, like I said, like I have a very, 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 very good way to spot good moves. And when I can't guess and see where the market, I notice it out. The difference between me and most traders is I can see, like my crystal ball right now can see that this is not a good market to trade. So all I'm doing is just sitting out on the sidelines. That's it. Price actioning happening in real time also has value. Everybody has a different method to trade. Like there's nothing wrong with that, but you can't say 80% of the time something happens when it's 50% or less. There's no, people like to just kind of make up numbers to support whatever they feel like saying. But I actually know the stats. It's really 50%. It's really like, that's really, I'm teaching you guys. So one of the biggest misconceptions is that the gap wants to fill. And the reason you think that is because if the market does move, it does do that and then sells off. But it's not trying to do that unless the stocks themselves are doing that. The index is following the stocks. It's a very simple thing to understand, right? Index follows stocks. And so the index wants to follow, if the index wants to do anything, or the ETF or the futures want to do anything, it wants to do what the stocks are doing. That's what it's designed to do. It wants to track the stocks. So this is telling you that the stocks themselves are not filling their gaps. So to say that 80% of the time the index is just going to fill its gap, that's wrong. It's for like 80% of the time it's going to follow the stocks. And the stocks are going to tell you what it's going to do. And the stocks are like 50% of the time they want to fill their gap. So it's more like, just look at this indicator. This will tell you what's going to happen. Like if you were to put a gun to my head and tell me to do anything from here, it's to trade this way, not up. So I like to teach that lesson though, because like I kind of wrote the book on gaps and gap fills in a way. But yeah, price action is important. Gaps are a big part of what we teach, but we teach it properly instead of just like randomly, arbitrarily, like making up stuff to go with it. Yeah, so that's it. The new blue indicator, and like I love when I say something. Where's the 80% guy? I love when the universe is like looking at me and fucking finishing my goddamn sentence in the middle of amateur teacher telling me Gap wants to fill 80% of the time. Like, listen. It's like the universe is looking out for you guys to hand you the less. Like at the end of my sentence, I'm saying the market, if I were to put a gun in my head, the market's likely to sell from here and then the candle goes down. Like I could be wrong, I could be right. The reason I'm not taking it is because a green candle can come out of nowhere too. But the market doesn't look like it's wanting to do that 80% of the time. So be careful when you listen to people's random stats that aren't based on anything. I just love when I'm in the middle of speaking at the end of my sentence, the universe is like, shut up, motherfucker, Matt is right. 80% of the time, though, it works every time. And I'm not trying to be a dick, but this is Wall Street. And I'm not going to let people teach you guys bad stuff. It's random. It's okay to say that it's random. It's okay to say that you don't know. I don't know. The 50%, it's not 80. It's random. The gap fills sometimes. Some doesn't fill other times. It doesn't want to do anything. It wants to hold. It's liquid here. The market seeks out liquidity. It's more likely to hover here because the stocks are doing the same thing than it is to go there. So what we do to handle that problem is we know there's high volume at either end of the gap, and the half gap is also high volume. But what we do is we wrote an arbitrage indicator that follows the stocks. I just love when I'm teaching a lesson and the universe is like, guys, listen to this guy. And again, the market can have a green candle out of nowhere and bust us up. But you can see that what the market really is wanting to do is to catch back up with the stocks. When this is negative, the stocks are down here. This wants, are we all convinced so I can stop teaching the same lesson that this wants to track the stocks? We get that? So when somebody said, is this a good long from here? The reason I didn't touch it is because resilience is negative. The market's pushing this way and trying to go this way and trying to go this way all at the same time. This is a clusterfuck of pivots right here. This is terrible. Do we all on the same page here? Liquidity map has negative gamma this way. Well, 92% of days close up in here. 90% of days close down there. This is the stat on this. Mr. Handsome, thank you. Yeah, 90% of days you close on the same side of monthly hedge pressure. 92% of days you close inside of this box. Go ahead and tell me when you have two 90% things fighting each other that that's not a coin flip nuclear bomb sitting there. There's just no reason to. The forces are too strong. You literally have two of the world's strongest men yanking a piece of thread. It's gonna pop. Like it's just not safe to trade this. And because I know that, I'm not touching the market. All right. So you have to be careful. I like a nice gap. I like a nice little, oh yeah, baby. Isn't every triple witching somewhat a clusterfuck? Yeah, it kind of is. This is the rocket scooter trading platform. Here. The guy that said that is gone. They're always gone. The question is, for more information about Rocket Scooter, just go to that link I just posted in chat. I'm okay with learning something, but when people are questioning, like, why aren't you longing, bro? Why aren't you trading, bro? Just check the charts, bro. It's like, because I'm glad somebody can say, you know, and they make money or whatever. Look, I make a living doing this. There's a whole method to what I do. I don't cheat my rules. My rules are really, really, really good. And when you got unstoppable force, immovable object fighting each other, just there's nothing worth gambling on something that's so unclear it's impossible to detect. The hardest thing I ever did as a newbie trader was to learn how to be comfortable sitting out of the market. Ever since I learned how to be comfortable sitting out of the market, my win rate went through the fucking roof. I'm talking through the roof. I know the market's random. We're staring at the edge of a crash right here. Literally staring at the edge of a crash. And the news comes up and then it pops to here. And now it's at an incredibly crazy fight that's going to spark monster volatility, right? The market is likely going to pivot and go ape shit today. How do I know? Because VIX is in a bullish liquidity map. And VIX is getting positive gamma hedging on its own monthly. Anytime VIX itself is in a bullish liquidity map, VIX is pressing bullish. This range is going to exponentially widen today. So whatever run or whatever fall or whatever we get is going to be major and massive. I make a living scalping 40 points on the NASDAQ. I don't need to be sitting here playing with potential 300 points of upside or downside when I'm wrong. I know that I don't know, which is the most comfortable thing I can say. I know that I don't know. And because I'm not confident in what it's going to do, I just kind of stay on the sidelines. And that's the smartest way to be. I always try to flex my accolades. I mean, I always tell people, like, trust me. I mean, you don't just luck into like winning contests. I mean, hell, I got payout my first 10 days with Tradeify. I got a live trading account with ETF. They only give that to the best of the best traders. Like I don't get to those finish lines by being regarded, if you know what I'm saying, guys. Got a few brain cells left, even though there's not many. Right or wrong doesn't make the money in this market. Being right or being wrong. Trading is an art form about how to be wrong the right way and how to not be right the wrong way. If you don't know, don't take it. Don't gamble. Like the itch to gamble is what most people fight with. I felt like if you look in the mirror right now and you look and say, I make a trade every single day. If that's you, you're failing. You're failing. And I'll be like, yeah, well, I'm profitable. If you made money last month, that's different. Okay, but over the course of a year, you're not making any money. I can guarantee you that. And if you're like, want to know why it is, I don't even know you, whoever I'm talking to, you're hearing something. I'm talking directly to you. If you look in the mirror and say you trade every day, you're not making money, and that's why. There's one strategy that you're lacking, is when to gauge the market's worth playing. You know how a poker player gets cards and just goes, nope, and they push them right back and they fold? That's a skill that traders have too. There's a whole part of your strategy that's missing if you don't have market avoidance rules. And if you don't know how to do that, that's what we train you guys on. I threw 3 macros and gave up. I was even right on my initial trade to long out the door with 3. But hey, you know what? The odds were good, right, to take the trade. I just didn't like what I was seeing. It was building, MHP rejection was looking bad, and looked like the market was going to crash. So I was like, ugh. And then the market goes up, and people are like, well, why aren't you taking the long, bro? Because I don't have to. That's the thing. When you make a lot of money doing this, you don't have to go make money every day. You don't have to have that feeling like I need to make a trade. I make a trade when it's like 80, 90% chance of actually going to happen. I got a lot of things that tell me that. No hurry to make money in this market. You guys just take it easy. Why is your liquidity map different than mine on the platform? Which one? There's a delay on YouTube, so it probably could have like switched the map, and it's probably just a little bit of a delay. Or also make sure you're connected. Make sure this little light is green up here. And I love when I teach a lesson about like the actual stats of gap fills and the person that was asking just didn't want to learn. I think everybody out there in trading thinks they're amazing at trading. And nobody's very receptive of like other people's ideas. I mean, I would love if somebody was like trying to teach you something substantial, but it's just numbers, bro. It's just on the chart, bro. It's not a good lesson. I think if that was the way my college professor was teaching me, I would probably ask for a refund for my tuition. Like, just trust me, bro, is my favorite lesson to learn from. But I'm not always anti other people's ideas, but when people come here with idiot ideas like that, trust me, bro, it's like, what's the point of even talking? You know what I mean? What I don't know. I know what I don't know. Who said that? Is priceless. I know what I don't know. No one to hold them, no one to fold them. This is one of those markets that I'm gonna. If you, like I said, if you were to put like a gun to my head and tell me what I think is gonna happen today, we could very much be like down there today. It's very possible. We have accelerating VIX, MHP rejection. It's a bad setup right here. Am I shorting to bet on a crash? No, I'm not touching this today at all. I want to have all my money in my pocket, and I want to make millions on the way back up when it finally bottoms out. That's what I want to do. That's my goal. We'll see if I'm right or wrong. I don't know. I could be wrong. I'm wrong sometimes. Socrates, I know that I know nothing. That's really smart. So, you know, it's like every time the market moves 10 or 20 or 30 points, your job shouldn't be, oh, the guy I'm watching didn't take it. He must not know what he's doing. If the guy you're watching is sitting out and has a reason to sit out, that is the person you should be watching. Like, what do you see that I don't see? Like, should I long here? Should I short here? I honestly think I have no clue which way the market's going to go. And there's no reason trying to guess. Because other periods of time, I have an extremely good clue where the market's going to go. As an example, like a move from here to here happens 90% of the time under those ideal conditions. I'll scalp that all day long, you know, 5, 10 contracts. I'll make $5,000 trades just off of like these 10 points. It's such a common move and it's so easy to see. Markets like this, I spend a lot of time just chilling, a lot of time just waiting, a lot of time just kind of like, you know, taking it easy. And that's part of it, you know, when markets dive out for like 2 or 3 months. Everybody out here is trying to like day trade and trying to like, let me tell you, can I tell you something that's crazy? I'm about to put all you guys on blast. Let me tell you something that's crazy. Let me see if I can look at some good stats. Hold on. You know how I know a lot of people don't listen to me? Let me find some stats here really quick. Okay, I'm not going to share with you guys the numbers, but I'll share you the percentages. I'm going to put a baseline number of people. We're going to do we're going to use 100 as a baseline. Just as 100, okay? And I'm just going to make this so you guys don't know how much I really make doing this. Trust me, it's a lot. But here's the numbers, okay? In November and December, it was 100. Sorry, in November it was 100. In December. Okay, so what are these numbers? These numbers are the amount of trader funding program, and this is on a baseline. It's not 100. The real number, I'm not telling you. It's a baseline, 100 base, as an example of a percentage change, okay? This is just with one company, by the way. In November, you guys bought roughly 100 of these things. In December, you bought roughly 100 of these things. In January, you bought roughly 60 of these things. In February, you guys bought 500 of these things. And 1 week into March, you've already bought 150 of these things. I'm just doing the math in my head. You guys are trading so much in this market. The affiliate revenue is up 5x last month over the previous month. Volatility, it's numbers to tell you, that you're over trading in this environment. You're trading a lot and you're trading too big. Volatility is losses, and that's kind of it. It's proof that the trader funding program thrives on your lack of understanding of volatile markets. They bet on the failure rate. Your failure rate went up 5x. This is what we like the statistics. I love. And this is just with one. And this is not even 100. You guys buy thousands of these things. I just rounded to 100 to give you relative magnitudes. I think I told you the other day how much we do in sales with these affiliates stuff. Well, the numbers tell me how much you guys fail in volatile markets. So understand the failure rate is universally high. They thrive on this environment. 5X. Ross Rounders Be the Grinder. I love that movie. So keep in mind, we're a week into March, and this is going to be a record-breaking sales month again for this one company. I love you guys, and I'm trying to help you see what you're doing. You're trading too much in this environment. So when we get people in the stream who come in here and say, bro, why didn't you long? Well, this is why I didn't long. You want to see the stats again. March, so February was 5X, the average bull market, right? March is slated to be roughly, I think, like 8 to 12X. Affiliate sales, which means you guys blew up and reset. Plus, we also are growing, too. That actually helps, but not you guys, but everybody. Plus, I guess I need to adjust it because we are like 10 times bigger on our stream now. But I think, in general, there's more people buying these things because there's a lot of trading going on. And what you're going to see me doing is trading a lot less in these environments. So hopefully the stats will help you guys understand. Like these kind of environments are just so hard to predict. It's good to sit out. And so there should never be like, why is this guy not trading? There should be like, oh, why is this guy not trading? Think of it differently. Like why is this guy not trading? This is stupid. Let's watch someone else. Somebody else is trading. Somebody else is not smart. These are the stats. The failure rate is ridiculous. I know that. Like I know that I'm not. There's nothing worth risking over here. I'm down $40. Yeah, trade your own money, you'll win more. Yeah, that's it. That's it, man. 0 trades this week. Just been sitting back. Very unstable. Best to just watch. Did I take my second payout from Tradeify? Nope. I've missed consistency every single time. This environment is not a good environment to trade these things in. That's kind of like the point. What I think of Warrior Trading, Ross Cameron, is he legit? Well, that's a hard question to ask. I don't know what he does these days. When I knew who he was 8 years ago, he was pumping and dumping penny stocks on his stream. I never found that to be a classy thing to do. I don't know if he's trading real stuff these days, if he's still doing the penny stock game. You guys might be able to tell me. As far as learning something from Ross Cameron, don't. That guy teaches nothing you can't learn for free anywhere else. Nothing personal. I don't know the guy, but I think anyone that pumps penny stocks on YouTube is just a verifiable piece of shit. Nothing personal. I think that's a terrible thing to do for a living. It's to sell liquidity to your own members and then double up and sell them a subscription and teach them trading on top of it. You're a fucking idiot twice as a customer of that kind of stuff. But I don't know what he's doing these days. In 2016, I had a particular distaste for that kind of behavior. I still do. He was front running his followers. Yeah, 100%. Getting in the trade first and loading up. There's a whole committee of people that get together before the market and they're like, these are the stocks we're going to talk about today. A couple of people got busted for that a couple of years ago when they were on trial with the DOJ. Whole crew of penny stock pumpers, same stuff. It's just that's not really trading. And let me teach you how to learn from him though. This is what you do. You do exactly what he does, which means you go start a room, you go build yourself up on socials, you get 1 million followers, and then you run the same racket and you'll make a fortune. And he makes a lot of money. But it's not repeatable. You can't do what he's doing unless you have a bunch of people underneath you in a pyramid. That's how that stuff works. Now, I don't know if he's trading anything real these days. I don't know if he migrated trading anything substantial like stocks, blue chips or futures or anything. Like I said, that's a name I haven't heard in 8 years for the most part. I know he's still around. Yeah. Is Apex a good trading firm? Nice rules. Apex isn't bad. It's cheap. The rules are hard and they have subjective payout denials for people that don't follow risk management rules that you don't really clearly know what they are. Apex is my least... let me start over. These days, it's decent. I use them. It's decent. It's like the... It's hard to say. I'm like on the... Apex is not a bad firm. Don't let me say it's bad. There's just better ones out there now. These days, it's like the least fast growing. Like Apex for a while was like the big dog where everybody's using it. But now with like Take Profit and Tradeify, these are like the growing ones that everyone's kind of using now. They kind of beat Apex in every other in every category. But Apex isn't bad. We have code. By the way, we use codes for all these affiliates. Like use our code because the money that we make from the codes goes back into supporting Rocket Scoot and development of the platform. So, somebody's saying, "Oh, y'all are saying he's a scammer." I mean, I didn't say it because y'all can clip this shit. I didn't say anything, but y'all are saying it. I'm more like gonna say the word scheme. A scheme is not libel. A scheme is the legal definition of a scheme. Hold on. What is a scheme? Is a large-scale systemic plan or arrangement for attaining a particular object or putting a particular idea into effect. He's a schemer. That's definitely not libel. He has a large plan to put an idea into effect. And what the idea is to, at the time, was to buy a penny stock and tell everyone about it and then sell as others are buying. So I call people like that schemers because I can't sue you for that word because that's certainly a neutral word. It doesn't imply any kind of illegal or fraudulent activity. But certainly there was an organized plan to actions like that. And anybody that does penny stock trading, that's exactly how that game works. And I'll tell you, if you want to win that game, go start your Discord and you go be a piece of shit and you go unload shit to hundreds of unsuspecting people and you will become a millionaire very quickly. Talking very quickly. You know, Jason Bond, not Jason Bond was his name. Tim Sykes was the one that started that. And then Ross Cameron was in his trade room and he got smart and went and started his own thing. And then Jason Bond, remember those guys? He was in Ross Cameron's room and got smart and went and started his own thing. All these guys started under the Tim Sykes umbrella. I was around and witnessed all of that. I was YouTubing at the time. I remember all the... You guys remember the guy who was like, eat, sleep, and trade, baby? The one that like... You guys remember the Jason Bond guy? The one that faked a Harvard commencement speech? Like he was... Like somehow they decided to invite like penny stock pumpers to go speak at Harvard. It was really like this fake Harvard set that wasn't even really Harvard. You guys remember that stuff? There's always like 1,000 people in that room, and there's always one smart guy that goes, you know, I can do this too. And they branch off and start their own thing. And they make all kind of money. But only they make the money. That's the thing with that kind of scheme. You know, only one person making that money. So I have no idea what he does now. I haven't seen him in 8 years. I didn't even know he's still around, to be honest. His current strategy, he teaches now how to use a scanner to find stocks that are moving a large percentage that day, larger they normally move. The question is the stock under $10? Because if it is, yeah, it's now Raging Bull. Yeah, those guys. You didn't know that? They all started as Tim Sykes, then Ross was in Tim's room, and Jason was in Ross's room, and they all branched out and started their own businesses that way. I was here for that. I was a moderator at Wall Street Bets at the time. Trust me, it was hot news. You guys remember I used to be a mod at Wall Street Bets. You didn't know I was powerful in the social scene back in the day. In 2015. That was true. One of the OGs in that realm. I used to run a bunch of subreddits. That's kind of where I got my start in this industry. Not the industry, but the social side of the industry. You ready for my meme coin? Rocket Coin's coming out very soon. Trust me. I intend to launch Rocket Coin. I intend to hype it and pump it as far as I can go. I tend to be exiting while you're buying. I'm going to make a whole lot of money. I'm going to piss all of you guys off. But then I'm going to say I'm going to donate it to charity to win your favor again so that you buy my next coin that I'm going to launch. I'll probably call it Scooter Coin. And this one's different, guys. We have a better team, better project. I'm going to rug pull that one too. And I'll make all kind of money. It's going to be great. It'll be so much fun. As long as you donate to charity, it's totally fine. Guys, I'm doing, you know, I'm donating it to turtles with cancer research. I mean, there's hundreds of them. We're gonna save the turtles. You only focus on stocks between $5 and $20. Oh God, abort. It's a low float filter. Jesus Christ, he's still doing the same thing. That's the crappy. What was it? What was it called? Trade ideas? I don't know. Some like MS-DOS looking scanner with like 10 zillion colors. It's called Trade Ideas, I think it was called. And use that scanner with these like low float settings to find specific low float penny stocks. But the scanner was just deployed because the stocks were already pre-chosen, pre-market, and pre-loaded. They would create the momentum that would show up on the scanner. And it was a team of people that would issue the stocks to each other. And they would say, these are the 10 stocks we're looking at today. They'd all load up on it. Then they'd load up the scanner and say, oh, we found one on the scanner that's moving. But it was moving because they preloaded on it. And then they would tell people, this is the one. And people would buy it and then they'd sell it. It was called Trade Ideas, I think. He still does the same fucking thing a decade later. Jesus Christ. I didn't even forget what it called. Is it like a zillion colors on the screen? It looks like the trading program was written in DOS 50 years ago. You're running, doing the same thing. Oh my God. A skateboard for every turtle. Are you kidding? He's still doing the same thing? Oh, bless his heart. Oh my goodness. There are people still a penny stock game is still hot. I think the penny stock game took a back seat in the news because everyone got into the meme coin game. It's the same scheme, same dream, same scheme, same people, different thing. It's still Trade Ideas. Oh gosh. Mometic. It's the new software they use. Mometic. Let's check it out. Momo Stock Scanner. Oh, it looks a little bit nicer than Trade Ideas. Yeah. You guys ready for it? Set up a scanner. Look for stocks that have a low stock float, where there's like maybe on less than 10% of the float is available for trading. Look for very high short interest on that stock. Find 10 of your friends to secretly load up and long that stock. As you're longing that stock, monitor the price. Oh shit, our buying is pushing that price up. Guys, we have a jackpot. Okay, I'll recommend it at 8:30, and then you mention it at 8:33, and you mention it at 8:40, and then you mention it at 8:50, and then we'll repeat every 5 minutes, and then after we get 100% of movement, we'll finally start liquidating. You guys all in for 100%? Okay, 100%. I'll sell half at 100%. Okay, good. And then they run it, and that's the racket. That's how it works. The Atlas guys, they were doing the same stuff. Organized circular trading. I mean, they got off the hook for it. Lucky them. I don't know how that happened, but that stuff makes you a lot of money. And only you, and everyone else loses. But you make the money. So go be that person at the top. Yeah, you don't make all the money. Here's to the tank. No, bro. Trust me, bro. It wants to fill the gap, bro. 80% of the time, bro. Like, when I say I choose to sit out of the market, I mean, it's gone a little bit of travel and it's gone nowhere. Like, I know what I don't know, and I know that I don't know this. And so just let it be. Let it be. Unfollow Firuz, follow Matt. I don't know, man. I'm actively not in a trade. I must not know what I'm doing. Boring days are boring. You want to play Call of Duty? We can get out of here soon and just chill. Thoughts on sending into the downside? We're in a state of increased volatility with Nasdaq with a negative gamma here. And if the S&P breaks its monthly hedge pressure, the market will crash today. I've been saying it all morning. And I love when I say it and the market pops and I get all the fair weather told you so's coming here. But I'm telling you, if the S&P breaks 575, the market will crash today. This is the edge of a cliff that will completely collapse the market. So the problem is there's no use of me taking any risk to bet otherwise. It's so close to the edge, I don't want to take it. So do I think it's going to come down? It's very likely that it continues to sell because we have negative gamma on NASDAQ. The problem is that it's not tradable. Even though I can say the direction is pretty easily seen, the market is very illiquid here, and I can't guarantee it's going to trend lower. Right now, the market is finding that resistance as the liquidity map is showing you. It's very untradeable. I don't really do much outside of these bands except for below the screen. I only long at certain places. This is one place to long from, and I never really got it. I actually tried to long in the S&P, which was right here. The red line was there, but I closed out because it was pressing a lot further. So I was trying to long the start of the day to there to close out, and I didn't take it. Now, this is alarming that it's trying to go to that second spot, which could dump the market out. Is that likely? It's not likely, though. It's a very, very low probability that we break and we die there. It's like less 10% or so chance. About 90% of days, or sorry, 92% of days will usually make their way back inside these green bands. So I don't like to bet that the market's going to collapse. It's not the collapse I like to do. The problem is that 90% of days on NASDAQ reject this orange line. So you have a 90% yanking it down and a 92% yanking it up. You've got two very, 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 very strong forces at play here, which is like going to rip the market to shreds when it does move. So you see the pressure is building up right here, and it's really big. So two really strong pivots yanking in opposite directions is like, it's dumb for me to like want to try to see that. Does everyone understand like why I'm not really trading that this morning? Which indicator is the best for long-term investment? The monthly maps, JS. For us, we have an indicator called monthly maps. SQ says 58.31. I'll buy there. I think you're right. We need signals to buy and sell SEC. All right, guys. Everybody load up on MATT coin, Matt coin. It's going to the moon. That's probably a real coin called Matt coin. It's not real investment advice. Phew. Scooter signal. Monthly maps are just ridiculous, man. Oh, y'all want to see something funny? I did this master class yesterday. It was really funny. So me and Paper Gains. So the mastermind that we did. Watch this. It was so funny when we... Let me make it bigger. He was... his wife was in the hospital. So you guys know... Y'all know Jason, right? Paper Gains. It's one of my buddies. So they're hosting the mastermind. And in the mastermind, I'm teaching. And I'm teaching one of two classes. And in the webinar... So he's babysitting his little guy. So he couldn't get away from... He has a 1-year-old. Baby Paper, yeah. So it's funny. He was like, he told me he's like his wife was in the hospital and she's okay, thank God. But like she's in the hospital for the day, and he's like babysitting his 1-year-old.
When there's an event, right, and somebody is longing on the news, event, the market is going to move very rapidly and then like slow down.
I didn't even see it either. It was just kind of funny.
Feds, right, market like moves really quick and then slows down, right? So the event makes everyone buy at the start, and then fewer people jump in at the end. But when the market moves like this,
that's so funny.
There was no catalyst. It's self-catalyzing. It's the curvature. It's the shape. So here, there's people that are moving and don't want to do anything. And then all of a sudden, the price is going higher, which forces somebody to fall on the bridge, which grabs another person, grabs another person, grabs 3 people, grabs 10 people. It's people that are forced into a trade. And so the only people that are forced into falling off the bridge, when there's an event,
just so
right?
Funny. He's like walking by with his hands up. He just like this. You know, like 1-year-olds, like when they first learn how to walk, you know, They're just like they're so happy that they're walking. They're just walking around. And so he's like trying to keep his balance. You know, that's like a digital fireplace. It's not a real fireplace back there. But the baby's
right?
just like
When
walking
somebody
around.
is
LOL.
long, it like moves really quick.
So that was last night. That was really funny. So that was the mastermind we did. That was amazing. It reminds you of when there was another, like I said, like you see how crazy the market. I don't know. Is there another Trump tariff news event? This is just like I say is like this is the day we just kind of sit on the sideline here. Let's see what we got going on. Any kind of you see this random volume coming out of nowhere. There must be something happening. So imagine when you look in hindsight and you miss the market rally and the market rallies and you say, man, I wish I could have gotten in on that. This is 2 days where you couldn't have forecast. Should I got in on that, right? Market just moved on random volume and the market's popping on random volume. You see this? This is what happens in these big sell-off markets is that the market is just going to move randomly. And there's no like momentum. There's no signal. There's nothing that leads into that. Market's trading lower than just, you know, we get 100 points in NASDAQ in 2 minutes, right? Ridiculous, right? But yeah, we have like Trump revoked certain tariffs in Mexico for USMCA goods. That's like not even NASDAQ moving. That's not even a big deal. Is it like... So USMCA, US, Mexico, Canada, right? That's what that stands for. What are USMCA goods? Let's see if I can Google this. Agricultural products. Trades between United States and Canada while offering broader market opportunities to U.S. exports to Canada of dairy, poultry, and egg products. Okay. That's like agricultural stuff. Chipotle stock buy it, LOL. I still can't get over the fact that Mexico has a president named Scheinbaum. Like, that's literally like the least Mexican ever in the history of Mexico. Is she a Mexican native? Are the rules there that you have to be like our president? You have to be like a natural citizen or the German from Mexico? No offense. I think Steinbaum's cool. No, I'm not talking any smack, but it's just crazy to. Or is that a married name or is that her actual name? Her family is part Jewish. No, clearly, I mean, Scheinbaum. Do I play zombies? I do sometimes. Her family is Jewish descent. I think she's great. I like her. I think she's good. I like her a lot. I'm sure there's people of Jewish descent everywhere in the world. I feel like Mexico would be like an interesting choice to immigrate to. If ever you can move in the world. How you would end up in Mexico. Very cool story. I'd love to hear it. Market went surprised we have a tank from here. Yeah, probably. I'm 43. 43. So yeah, I play zombies sometimes. It's kind of fun. You'd be surprised the market tanked from here. So in Mexico, just one parent has to be American, or you're born with in America, one parent has to be American, or you're born within geographic United States. Yeah. Cher says, NQ will take yesterday's high first or yesterday's low. Honestly, I'm gonna tell you because of the fight here, this is not worth even guessing for me. 92% of days close here and 90% of days close here. We have two different competing pivots. This is the 90%. So the problem is that you see right here, does everybody see how it's just like a really big glorified coin flip? Like it's just like equal pull both ways. That's why I sit out and don't do this, because I like to play with definitive moves that make sense. This one doesn't make any sense. Rates are still likely to fall further, 2.5% unlikely to be the bottom of the cycle. ECB. Oh, it's ECB interest rate news. Reprieve for Mexico USMCA goods until April the 2nd. Like, trust me when I say if you're having a bad time trading this market, don't worry. Okay? You are not given any signals of this movement. I'm teaching this like I traded Trump before. It's the same crap, different day. Trade high probability setups only and sit out of the rest. I'm telling you, Trump is going to knock your trading account around so bad. You don't want to deal with it. On the volume spike and we didn't get rollover today's high, I suggest it should roll over. Yeah, it's probably going to fall from here. Like I keep saying, the resilience is down. The market's likely going to be not filling its gap to the upside. Half gap rejection. I mean, we got all kind of things yanking this lower. And again, I could be wrong, but I don't care. I'm just not risk on the table at this point. I think it's going to come down, but we'll see. Res less than 0 is rejection here to there. MHP rejection off of there. DD band wants to close up in here. So the strongest of all of these signals is the number 4 that I've circled over here. This one here. That's the strongest one. But you got to imagine, right? I mean, you've got two competing signals stacked right on top of each other. Ideal. Go Red Dead Redemption, just go hunting. Dude, that's like one of my favorite pastimes. Go on Red Dead and do anything. If I want to get off of a bad day, I'll go on Red Dead and I'll get like full, what is it, 5-star wanted. Like I'll go rob a stagecoach and then like, you know, throw the bodies in a river and then get all the people chasing after me, and I'll just go in like a big guns blazing showdown with hundreds of sheriffs chasing me down. That's how I like to unwind on a bad day. Just go like full ham 5-star wanted. Go a wild surfer and just farm boars. LOL. How do you kill that which has no life? I never played AoE. Didn't they just come out with a new one there, right? AoE 3? Red Dead is such a fun game. Like the first time I played it, Red Dead 2 was just amazing. Like the first scene where you're in the snow, and it was just so, it's like such a gorgeous game. By far, Red Dead Redemption 2 is one of the greatest video games ever made in the history of video games. If you've never played it, oh my god. It's like, you guys know what Grand Theft Auto is, right? Where you run around and you know, go to strip clubs, steal people's cars, kill people, rob them. It's great. But imagine doing it in the Old West. And that's Grand Theft Auto in the Old West is Red Dead Redemption. Outlaws, this open world thing. You can do anything you want. You could feed people to pigs. I mean, it's hilarious. Yeah, you want to hide a body, find a big pen and throw it in there. You won't get wanted for that. It's Grand Theft Horse. Yeah. But it's good because like the story's really good, and it's just like it's a very addicting game because you're out in the countryside, so it's like you're not just like in the busy. It's like you know, you can go hunting deer if you want. You can go, you know, gathering herbs on the countryside. God of War is pretty good, yeah. You love Red Dead and you played your first video game in the 70s? Oh, yeah. You more worried or scared about taking a horse in the 1800s and the car in the 2000s? I think that's really accurate to say. Now, yeah. I think like you wouldn't be able to horse jack anybody back in the day. Everybody would have a pistol in your face. I bust it out every once in a while when I just want to have like a fun chill day. I think what I do on down days is I play like, I'll just like play Call of Duty or play something. Copycatting yesterday's move. Well, like the market's staring at the edge of a crash here. And I'm not lying to you guys. I honestly feel that this is not. I know I posted it this morning, but like it's like I can see this happening today. I really can. So, better to sit out. Lines are overlapping? No, that's not possible. Oh, that could be it. All right, hold on. That shouldn't be it. Oops. Yeah, so what we're noticing today with the MHP resilience indicator and the hedge fisher resilience indicators, they're exact. The yellow and blue lines are on top of each other, and that does not seem correct. So we're double checking this one. I was like, where's the orange line? It looks like if you look at the numbers, they're exactly the same. So it looks like there's... What the hell? Okay, we're back. My computer's glitched for a moment there. Is Quant Data a good vendor for options flow in your opinion? Never used them. Let me see what I can look at. Quant Data. What do they have? Let's double check. Let's see what they got here. Options order flow. Traders display as they arrive in real time, providing you with all necessary data to make knowledgeable. What are you trying to use it for? Trim. I hate when they don't really show you the features. I hate seeing the sales page. Show me the juice. Real-time options order flow, historical options order flow, dark pool prints, dark pool levels, algorithmic quant alerts, and everything else, unusual activity. Okay, so this is like all right. So apps like this aren't bad. Okay, so let me tell you a secret. There's an API that you can connect to. You buy data, an API that gives you all of this stuff in a package. They give you real-time, historic, dark pools, and unusual flow. And then people build really fancy interfaces on top of that data. They're all exactly the same. They use the same data. Black box stocks is all the same. So this is I call them black box clones because black box was when they got famous. Not bad. It's going to be your unusual flow detector, unusual order detector. All you care about is the interface nice. It's a standard data feed that I could buy myself and build a company that sells this kind of data. you can actually buy this pre-packaged data feed with all these parts in it. So nothing special about here for the most part from what I'm reading other than it's standard stuff. But it's not bad. I mean, don't say that I'm saying that it's bad. There's nothing unique here that like it's what you care about is that the interface gives you the information very cleanly. A little different what we do, but it pairs well with what we do because it alerts you to unusual options flow. This is usually what people care about. Then you can do filters. It looks like pretty cool. Profit calculators, pretty standard with most platforms these days. Daily gainers and losers. This is all voice notifications. You care. Analyst ratings. Daily flow. Like this stuff is a package of data that basically what companies like this do is they buy a bunch of special data feeds. You can buy like an analyst rating data feed. You can buy an unusual options data feed. You can buy dark pool data feeds. We choose not to buy all of that, but you can buy them. And there's companies that actually package it all together and sell it as one thing. And then they just mark it up in an app. So it's good. You don't have to go buy out all this data yourself. And it's all used in one spot. But Black Box Stocks is very similar. That program looks pretty good. Just basically, is the interface good enough for you? Unusual options activity will show you unusual things that are happening the moment they happen. And it usually pairs up very well with like our pivots, which is good. I always used to recommend Black Box Stocks to folks for the unusual flow. Quant Data seems like a good platform that does the same thing. So honest review, yeah. I would say that the data is really good. It's useful if you use that kind of data. Unusual flow and dark pools can maybe give you some insight. Usually unusual flow is happening at the moment, so you have to like listen at the moment. Dark pool is like delayed response. You know, the orders could be from like minutes to a day earlier. I never found dark pool useful. Some people here might. I don't. I never did. But it's not bad. And then as far as what it's worth, they aggregate all that data into like one package, and then they make it easy for you to see it. Then all that matters is the interface good. And it seems to have a mobile app, which is nice. Sometimes a mobile app with alerts is pretty good. It's only like $57 per month. Yeah, for all that data, that's not bad. Like I can go to my data providers right now and get all that same data and build that into Rocket Scooter. I can do it overnight. So there's those APIs that they're out there sell that standard data. So I'm telling you, there's no difference between company A, company B, and company C. You're likely not going to get anything special or different between them. It's all the same data. Just so your question is now, which app do you like better? What is the most important thing to look at? Use it. It works pretty well. So Elliot says he likes it. So if the app works really well, then it's definitely worth checking out. The data is extremely useful. And so a lot of people don't know the difference between a lot of these type of, dark pool, this company or that company. They all buy the same data feed, and you're just getting a display to go with it. So it's just which one do you like better? To look at, it's hard to say. Well, I always err to the side of telling you our pivots are the most important thing to look at because they're so good at predicting high volume. Like DD bands, monthly hedge pressure, liquidity pockets. The Rocket Scooter stuff being the most important to look at. We have better gamma exposure models. The one thing that sets us out than anybody else out there that's gamma exposure is we do something different. There is no standard data feed. Well, actually, maybe there is for gamma exposure, but most gamma exposure models are a open interest heat map modified by gamma. Ours is completely different. They don't do anything like that at all. So ours is unique. Ours doesn't come from a data feed. Ours we built ourselves, and ours looks at all the options that exist, and we pluck out the only ones that we believe belong to market maker trades, so zero risk options. And then we don't look at all the options. We don't look at the ones that qualify, and then we do gamma exposures on that. On that data. So ours is different. So if you're looking at gamma exposure, bar none, we're the best. Our stuff is very good. And all the other gamma exposures are clones of each other. We're the only one that stands out. It's uniquely different. So when it comes to gamma exposure, I tend to err to the side of what we've created because we are a step beyond other people. Most people use all options. We use some options. We don't use all the options. The only people that choose to use only some of the options. That's different. So Greco said, yeah, they're all the same. Yeah, they're the same. The data's good, and they're all the same. Yeah. Data bento is the best data feed retail can pay for. You got to know how to process it yourself. It's not all color coded and pretty on the fly. It's more like raw data. That's kind of nice. Yeah, but Trim, might check it out. If it's only 57 bucks a month, give it a shot. See if it helps you with anything. What people do with the unusual activity is it usually confirms your pivots. Like if something weird is going on here, you're probably going to get unusual activity and hedge pressures and DD bands and stuff. So let's see if I was right today about the market collapsing. I didn't say it was going to. I said we're on the edge, and if it does, it's bad. And we are back on that edge, ladies and gentlemen. And I'm glad that I'm sitting here with my $42 loss. Oh, boo-hoo. And I'm just chilling. But to the folks that say, why didn't you long? Why didn't you short? What are you doing here? Get used to the idea that there is an okayness to not trading. It's okay to not trade. It's absolutely okay to not trade. And to feel comfortable with being uncomfortable. The most uncomfortable thing in the world is, oh my God, I'm missing out. This was the play. This is where the money is. This is where the wealth is. I should have gone. I lost that feeling years ago. And when I lost that feeling, my win rate went through the roof. The most powerful thing you can do as a trader is have the need to trade. That feeling, that need, go away. They do live streams every day. Oh, cool, cool, cool. I like when people do live streams to demonstrate. I love when people do live streams to demonstrate their own product. That's kind of cool. I support that. Hey, they sharing that. What's up, Smokey? What's your view on option volume driving the futures market? You think that options degens drive the market? I think options degens drive, or options in general drive everything for the most part. The majority of movement in the market, despite like speculative longs and shorts, a lot of sudden market moves or impact market moves are based on runaway hedging events, gamma squeezes and stuff. Yes, 100%. You're about right at 575. Watch, I'm going to show you this, and I even tweeted this morning. The funny thing, I tweeted this and I said, if 575 is the edge of a crash, literally the edge. If we break through I'm going to walk you guys through it. If we hit 575 and go here, you will see volume spike really heavily. Like it's guaranteed. And looks like we're getting there now. And if that volume spikes, what happens is once you kick all that positive gamma to negative, the capitulation alone can create a chain reaction that can fall. Where can it fall to? It's hard to say. We need to find some pivots, but just looking at the shape of this, it could fall pretty quick. So as I'm speaking, as I'm literally speaking right now, let's watch that volume come in. We are at the edge right here, and this is going to be volume. So let's see. Yeah, and so you're absolutely right, man. I firmly believe that. The majority of a lot of this movement has a lot to do with hedging. The market is getting a lot of selling pressure now. But if that selling pressure topples the market over, it can create an event. Let's find a low if it does happen. It's scary, right? This is a scary market to be trading in, which you and me and everyone else. I want you guys to tell me, especially if it's your first day here. Is it anybody's first day here? Was my choice to sit out a good one? If it's your first day here, did you learn something from me at least? That's all I want to know. I didn't miss out on the big rally. I didn't miss out on the big short. I didn't miss out on shit. I just chilled, and the market's back to where it started. First date, cool. So not every day is worth touching and trading, and it's part of understanding that is actually like, you know, having a system to just avoid the market. I could have shorted and got squeezed. I could have longed and got squeezed, and the squeeze, you know, 50 points up and down is just not really something I want to play with. So hopefully you guys are understanding that it's not just like every day has to be a trade, every day has to be a win. I'm comfortable. I'm very comfortable. Oh, we do have a futures gap, don't we? All right, so let's plot the futures half gap because we do have a pivot, the halfway point. So let's find this bounce. Hopefully there. And it's totally okay to not do anything. And you'll notice that there are days when I just don't do anything. I'm too smart to do something. I feel like I'm not like guessing that it's going to crash or guessing anything. I just say the potential's there. And because the market can do something crazy and we have two really strong pivots fighting each other, it's best just to like sit out. Idris, oh, what's up, Gibo? Cool, cool. Gibo's not your first day, is it? Great live feed, Idris. Thank you, thank you. And first day, Mike, welcome. Yes and no. Doing nothing is the hardest thing to do. And the reason that I didn't do anything is because we have some really strong pivots. So here's some rules that we follow here. And at Rock Scooter, we give you guys cheat sheets to kind of display this stuff. And so one of the cheat sheets is really neat. I'll share it with you. Now, yeah, the quant data looks pretty cool. Like if I use that kind of stuff, I'd check it out. Definitely doesn't look bad. I would say one of the cheat sheets here is very cool. This DD band is based on margin requirements, and just take my word for it. This right here is a guaranteed high volume pivot. This right here, it's massive how crazy this thing pivots. Let me show you some of the volume here. Even in the overnight, you can see how there's a volume spike. We all see the volume spike here at the bottom. Wait, hold on. Did my thing crash again? Oh, y'all can. Okay, no, we're good. We're good. You can see here, volume. So there's a volume spike here because there's something interesting that happens. Yeah, my encoder froze. Okay, hold on. Wait. Don't go anywhere. Let's try something else. It's frozen on my screen. Isn't that crazy? It's so crazy. Oh, my encoder's busted. You guys can't see it. Oh, that's crazy. Okay, hold on, wait. All right, I got to close down and reopen it. Don't go anywhere. Don't go anywhere. I'll come back in like 2 minutes. All right, we're back. Okay. Okay, so here's what we got. It's funny, yeah, my encoder, it glitched a second ago and everything froze. Okay, so one of the cool things I'll show you guys is that these are some cool rules based on margin requirements, and I'll show you. We have cheat sheets that we give out with this, so just take my word for it. These are based on margin requirements. They're very key pivots, okay? And we also have a handout. It's such a key pivot that you need to know is that there's a little handout, and I'll put it right to the side. You guys see here, there's green bands here, green bands here. 88% of days will close in between the green bands, 8% below and 4% above. So it's very common to stay in the green bands or end up there. Now, when you get below the band or above the band, the market's in a state of we call it irrationality. The market is automatically shifted into a weird state where we're only trading small. See the word S, the letter S, sorry. S means small, very small trades only outside of these bands. So small, I hit it with 3 micros. I lost $40. So one of the things is that inside or outside of these bands, what you'll may notice is that we don't short below the band. There, even though the market is selling, I don't try to short because it usually pops back up to the band. Does everyone see on the right side of the trade on the screen? There's a trade here. It says strong pivots only. Let me zoom in. Okay, we see this. It says strong pivots only. These are some code letters, but red RL, red line, the red line I drew here. Red line back to the green band, small longs only. It's such a common setup. I actually tried to take it and I just scared myself out of it with 3 micros. But as you see today, S&P had its moment and that was there. And that trade took off here to here. It's so neat, and there's high volume at both of these spots. Now, the interesting thing is that down in here, we don't short off of this band, even though today it decided to fall. The reason I don't short is because only 8% of days close below. Now, while it can completely crash from here and I miss out on the short, that's okay. I still sit out. So that's kind of like the point is that I could have taken that long from here to here, but I would have closed out my day anyways and stayed aside. Because we have 88% plus 4% is 92 that it breaks above this way. You have all these competing pivots that go the other way. So this is the S&P. And S&P is not really giving you a good idea that the market's kind of tied, but NASDAQ did. When you look at NASDAQ, it's the same thing. NASDAQ liquidity map, QQQ, is screamingly bearish from there, right? And while in the same token, QQQ has that 92% that wants to go this way, this is a 90% of days will close on the same side of that. So 90% is down here. So the idea that we have two high probability pivots. Let me show you on this chart. 90% of days you stay on the same side of orange. 80% of days you stay on the same side of blue. 92% of days you stay on the same side of green on the inside. These are how our system works. Again, under ideal conditions, this is great. Now, the market is non-ideal today because some of these lights are red, so that's roughly 70% for the 90s. 60 to 70% is about where those probabilities land. So it's still a high probability, but equally so, the high probability is pushing and pulling at the same spot. So it's violent and crazy. Now, when I told you we're going to break through this level, we're going to start seeing high volume. And as you see, the volume is sporadic and high and starting to pick up. So in this particular mode, the market is now into what we call crash territory. It's probably going to get really bad from here. Be careful. Why does it look like we can rinse and end? Oh, dude, I'm so happy I'm sitting out and just watching this. Any levels or data plan for the volume profile logic? I hear your levels and concepts, but there are high probability levels in volume profile. So Gus, we predict a volume profile. Did you know that's what we do? Absolutely, but we can predict a volume profile like before it happens. What up, Smirk? You took a nap, you came back, market's finally crashing. Okay, so I'm going to teach you something very cool. So you are 100% right. If you can isolate and find where volume is, you're kind of on the right page. All right. So let me show you something really neat, right? You are 100% accurate, right? Let's go here. Let's add a volume profile to this. Watch. So while volume profile is neat, I can give you a volume profile a day in advance. Interested? We can predict the volume profile before it happens. That's the magic here. Watch this. Let's put a one-day volume profile. Okay. So yes, high volume nodes, low volume nodes, point of control. Let me give you a quickie 1 minute lesson on volume profiles from my point of view. And you probably know all this stuff. You're really smart guys. This is elementary probably. But for you, I'm sure you know all this. High volume node is based on previous volume. Like at this moment in time, this is all the volume over the time that I spanned in that setting, which I said is 1 day. So this is looking back 1 day to find the volume. And it's showing me that the volume has accumulated like here and here, and it looks like here. Okay. So as of now, as it's trading, we're displaying the volume to you. You can see that so far. Okay. So when I move this over here, watch, this is where the magic happens. This is why, you know, we're kind of like going viral now, because the stuff that we do is a little next level. So watch this. I agree with you. They're very important pivots. Now watch this. What is that? Yes. Okay. Very true. So like on SPY, right? Let's put SPY here and do the same thing. So when there's liquidity, there's going to be high volume, right? That's one thing I want you guys to note. Let's match them up to where it's kind of like equal size on both sides. All right. So when there's liquidity, there's high volume. When there's illiquidity, there's low volume. Okay. So there's going to be liquidity here, illiquidity here, then liquidity in here, with the high amount of liquidity right at about 578 or 577.5, and a high amount of liquidity at 575, because hedge pressure predicts high volume, hedge pressure, high volume. So 577.5 is here. Actually, right here. 575 is here. These are high volume nodes before they even happen. This is a high volume node. This is a high volume node. This is a high volume node if you were to get there. This is a low volume node, 579 to 580. 579 to 580 is where the volume dips a little bit. So if you didn't know what this is a map of what a volume profile will be before the day starts, before the volume even gets there. Pretty cool. So the idea is that I'm telling you where your high volume pivots are going to be. They're going to be here, and they're going to be here, and they're going to be here. 580, 77.5, 75 are your high volume nodes. 75 is your point of control. 77.5 is literally right here. That's the spike is closer to 578, but it's, again, hedge pressure. This is your hedge pressure. This is your monthly hedge pressure. Isn't that neat? So value area, not that worth it. Value area is subjective and you can set it, and value area is highly sensitive to volatility. You're looking for high volume nodes. That's really the important part. Value area is an arbitrary number that you can set. What's a good number? Well, is it 70% okay? In volatile markets, you know, what should you do in volatile markets? You know what I'm saying? Like, you can choose whatever you want for the value area. I firmly believe that now value area is trying to look at a standardized distribution and then assume that the majority of volume is accumulated at some percentage of the bell curve. That's kind of what value area is. The math standpoint, but I don't really like utilize a percentage that makes sense. The market is, you're going to realize, I maybe you'll see this as time goes by, that Thinkorswim looks like a default stat is 70% of the range is useful trading. In volatile markets, the S&P could fall hundreds of points. The 70% is very arbitrary and very, very like dependent on the volatility of the market. Does that make sense? Maybe in a day where the S&P is moving within like a 40-point range, you're going to care about that area. But I always felt, I don't know, what do you guys think about the value area? Did you guys ever think that the value area had any weight to it? In reality, you're looking for high volume and low volume nodes. The area is more of a, you know what I mean? It's kind of like, the question is like, what is the right number to put in there? What's the part that's important? Value area, stay away. So really what you're doing, you're just saying like of the distributed volume, this is the important area to trade in. You can put any number in there, it doesn't matter. So I feel that all that matters is just your high volume nodes. So let me play a game with you guys. As cool as this is, so do you see so far, Gus, that right here and right here we've shown you high volume nodes, and 575 and that are the high volume nodes. So at 9:30 in the morning, I told you today's high volume nodes before we got there. So pretty cool, right? And no trades at point of control. No, point of control though is your best pivot of the day. It's your highest volume. So only low volume, high volume nodes, most people. Okay, good. So yeah, it's great questions, Gus. I love the questions you're asking. So as an exploration with this, throw me a random ticker, and I love to play this game. Like, give me a random stock today, and we'll do the same thing. And I'll type in a stock, and we'll do the same game. Because I love proving this to people. So what we do is we actually are mapping out a volume profile and also giving you predicted flow direction to go with it. Hood. You guys asked me to do Hood yesterday, man. I love it. Let's look at Hood today. All right, Hood passing through all kind of stuff. Okay, so what's neat about these kind of pivots is that monthly hedge pressure is one of your biggest volumes you're going to see. When you pass through it, the volume spikes. It's pretty cool. So, or actually that's at the open, but when you pass through it, you typically have volume spiking, and hedge pressure, you have volume accumulation as well. So today, Hood is going to have high volume all across the board, 46, 47, and 48. It's all high volume. So Hood is going to be like just a big bell curve, I think. If I were to guess, I'd say hedge pressure probably point of control closer to 48. And there you go. Here's your point of control, 48. Remember, I give you this data at 9:30 before the day starts. I told you where your point of controls are likely going to be. So there's your 48. And it's 47 could be high volume-ish relative. We didn't spend a lot of time there. And then 46 at the open, also high volume as well. So 46 and 47 have combined to make this little node right here. And then 48 is that node. Pretty cool, right? And I love doing this so I can show you guys. Yeah, Hood was very, very popular yesterday. NVIDIA, yeah. So without cheating, we're going to guess on NVIDIA. And NVIDIA, let me show you. Not a lot of activity off of hedge pressure, but you do have at least this 115 high volume node here. And no illiquidity pockets or anything else. So yeah, basically 113.5 and 115, but 115 POC NVIDIA probably. I'm sorry, 115, yeah, 115. Oh, and actually current volume is a little bit fighting over here. All right, so NVIDIA is... So the way Rocket Scooter works is monthly hedge pressure, liquidity pocket, which is here to here, or basically the bottom, we're all going to be high volume nodes. And the open and close. So in reality, like this being like a clustered up day, all these are possible high volume nodes. 115 is high volume, which is here. 113.5 is high volume, which is there. And then these are out of bounds. We didn't touch them. So showing you areas of interest are very important. You already kind of know where your high volume nodes are. And that's why I pivot and trade off of them. For a Pro Plus 30-day trial, yeah, see, it's already built in. So if you go to the website, it's already going to be built in for you. Let me give you the link, buddy. So yeah, so part of the Rocket Scooter philosophy is to create something that helps you before it happens. All of our indicators are designed to be like leading indicators or something ahead of the market. So yes, while high volume nodes are very strong indicators, they're not necessarily... They're going to be your pivots you're going to trade on, but when you lose a high volume node, not yesterday's volume, but today's volume, that's important. While yesterday's volume can be pivots today, sure, wouldn't you like to know today's volume before it happens? Imagine people tomorrow being like, so NVIDIA has a 113 point of control, 113.5 point of control. You're like, yeah, I know you're tomorrow they're saying that, but you're like at 9:30 today. Yeah, but that's where it is today. So the idea is that you can actually know where the volume will accumulate in the daytime today before it happens. So at 9:30, we draw the map every morning. So come here at the stream every day. We draw the map. And your areas of interest are going to be here. So this is high. I'm going to write, this is high volume right at this pivot. This is low volume right up in here. This is low volume node from here to here. This is high volume node from here to here. This is high volume node around this pivot. This is high volume node there. So essentially each of the major pivots is high volume, and then anything that's in what's called an illiquidity pocket will be low volume. And anything between the pivots is low volume. So in between your high volumes, you're gonna have low volume as well. So that's why you get this dip right there, because there's no liquidity at those spots, right? A couple more. You guys want to do it? GME. All right, cool. Let's see if I got anything good on GME. GME is actually all kind of contained. This, you're literally in your... GME didn't go anywhere today, so you have a point of control right there in the middle, 24.5 to 25. Super simple. It's going to be a little simple little bell curve. 24.5 to 25, and there's your 24.5 to 25. It's just one little bell curve. Right, just one. What else did you do? Verizon? I love this game. This is so much fun. See, I do it, I draw it, and then I'll. So Verizon, like if you would see at the start of the day, you would draw just like this. You're gonna say, okay, we're gonna have, you know, kind of low volume, high volume, high volume, high volume, high volume, like that. I would say 43.25 is your POC today, or somewhere up there. There you go. 43.20. So neat thing about it is that at the start of the day, you can map out your volume profile that day. Imagine getting a step ahead of everyone else. If you want to map volume profile a day in advance, that's why we're here. So this is going to be like you're using today's volume before it happens, and everybody's using yesterday's volume tomorrow. Pretty cool, right? Okay. So the neat part about it is that while value area is more like a subjective thing, you can choose whatever you want. I would try to like formulate a strategy without it first before you try to create some kind of area. Imagine the market moves like 400 points. All of that is important. So 70%, 50% is kind of arbitrary, right? I don't think it makes a difference. I never really thought value area meant much personally for myself, but here's kind of the little map that I drew here. And I'm going to kind of mirror what I drew. 43.5 is here's your low volume that I drew. High volume that I drew. The low volume that I drew. And then the couple of little waves right here. And then the low volume. And then we didn't touch the other ones. But this is pretty on point, okay? With what actually happened. So there's your low volume, low volume. There's your high volume around hedge pressure, high volume around hedge pressure. There's your lower volume around the open and close. Lower volume, open, close, little M-shaped thing. M-shaped thing. Your open and close always create an M-shaped thing. Did I do an okay job? Once you learn how to do this, it's really fun. So we actually take it one step further, is that we give you a liquidity map, is really just telling you this is where the high volume nodes are going to be, here, here, and here. You get in a high volume node, you get out and ride the illiquidity. So get in at a high volume, ride the low volume, get out at high volume. You're trading high volume node to high volume node, which is what we're actually doing. This is exactly what we're doing, except we're getting a step ahead of people. Instead of you utilizing like yesterday's volume, we can use options to predict today's volume. And that's kind of why Rocket Scooter is like, the name actually implies a scooter is a volume profile, but we're the Rocket Scooter version of it. Ours has got a rocket engine on it. It's a little better. Okay. So talk to you like you're 3 years old and explain how you get volume profile ahead of time. So volume profile is just telling you how many trades took place at each price. If you're to like stand on your head this way, right? And you're looking at the graph sideways, right? You have an axis that looks like this, right? It's like price and volume. And from price going from like, whatever, we're going to do something here, like 42 to 43. You're going to have this little, volume is going to be all over the place. And traders are typically taught that when the volume is really high, this is a place to trade from. Long at this price, long at this price, long at this price, right? If there's volume, that means other traders are trading, and that's an active spot you want to play at. The thing is that a volume profile is only showing volume that has happened. So all you're seeing is as it's sitting here growing in time, as trading is actually happening, you're going to watch these bars all change size in real time. Like wherever we're trading right now. So we're currently like right here. As you see trading happen, let me go here. Right, you're going to see this volume kind of like move in real time. Let me go to like a 1 minute chart so it's easier to see. So remember, you're standing on your head. So volume is taking place right here. You're going to see these bars start to move a little bit as trading takes place. We're trading right here. These bars are going to inch out as volume happens. Right. But the thing is that usually a volume profile is showing you, usually people will use like previous day or previous week. Like where's the volume been all week? So let's like change this to say the distance of 1 week. Let's see what 1 week of data looks like. And when I change this to show 1 week of data, right, we can see that historically with the little graph we turn our head on the side to look at, that there's a lot of hot spots, right? So if you're swing trading or day trading, you're going to say, aha, there was a lot of volume here, so there's a place of interest. Aha, there's a lot of volume here, there's a place of interest. Now this is looking at the entire week and where the volume's been distributed. So typically, the idea is, well, this is an important part at some point in the past, and to me it's important today. If Verizon were to fall to here, Traders are classically going to trade to long from here. Okay. There was support there. This shows you there was volume supporting that support. The market pivoted there. There's support. So we're going to long there today. So the problem is the market moving or something? Y'all are saying, what the fuck happened? No, market's still crazy. So the idea is that previous volume can imply future volume. Previous pivot can be a future support because there was a lot of volume. There's a lot of buyers that stood there, so they're probably still holding on when you get back there. It's the philosophy of that. It's not a terrible idea. It's not a guarantee that you're going to get movement, but it is your best guess at showing where liquidity is. Liquidity is volume. Like more volume, there's more trades. And so when we say high liquidity, we're really just saying high volume. So the perfect way to trade is to find liquidity and long it, or find illiquidity and short it. So high volume nodes, you should always long at. Always, because it's a liquid spot. Liquid markets don't crash. So you should always long at a high volume node. And the weekly high volume node on Verizon, point of control, is a long pivot. It makes perfect sense. Now, it doesn't mean that people that bought Verizon in the past are buying it again here. It's not the same buyers. It's more just like they're not selling from here, and the natural tendency of the market is to inflate in the presence of liquidity. So the market's just going to naturally go up and not crash unless these people that bought last week decide to dump. So it's not like if you bought like something a week ago that you're the one buying it again here. That's not really what makes it move. So far, so good. But the idea is that people make inferences about like where I should trade based on volume profile. Now, the thing is that because what people did in the past doesn't affect what they're going to do now, I want to know what people are going to do now. Instead, I want to look at today's volume and try to guess where it's going to be accumulating now. And options give you the ability to do that. So an example with options, I'm just going to spell it out very cleanly. A call option. If I were to buy 43 call options for Verizon, I were to buy 143 strike calls for today. 0D. I've announced to the world that I would like to acquire 10,000 shares of Verizon if it goes above 43 by today. So because I've told you I want to buy 10,000 shares here, then I know there's 10,000 volume here if price passes through it. So, and that is a very simple explanation. That's the 5-year-old explanation that's going through it. But the idea that I told somebody I want to buy an option, I tell people I'm putting this much volume at that price. And if you turn your head this way, it's volume at a price. I'm announcing to the world I've got a possible intention to add this volume at that price. Now, we do a little bit more sophistication than that because we're not looking at every option. We're looking at market maker options that our algorithm can decide if the market belongs to a zero risk tandem trade. And that's how we get these hedge pressures calculated. But these are all the weekly options in Verizon, and these are all the monthly options in Verizon. I feel like my platform's about to crash again. Dang it. My mouse is starting to get slow. Oh boy. Okay, let me just close things down. I'm not trading anymore anyways. So now the answer to your question is that I can use options to, oh no. Guys, my computer's about to blue screen. I can feel it. Let me start closing some windows. So the idea is that hedge pressure is telling me where there's a net flow of volume here on monthly options and net flow of volume on weekly options. What actually causes the volume here at both of these spots, and again, it's really neat. It never fails to do this, but it's showing you a volume spike. Here's hedge pressure, and look at that volume spike that went right here. What's actually happening is there's like an influx of volume. So when you pass through this, you can imagine there's a risk to people. And the risk is to the long side and to the short side. And at that balance point is where that risk kind of flip-flops the other way. And imagine like a way to explain it is that Say that you have long like 100 shares of a stock and you want to click the reverse button and then you short 100 shares. You might just think, I'm long 100, now I'm short 100. If you think about it, you had to actually sell 200 to get there. So your long, when you reverse polarity the other way, is actually twice the size of your long to sell. So when the polarity flips from long to short, the power doubles, right? And so because of that doubling effect, and this is the 5-year-old explanation, all of the hedging that is short, that to flip long, or accumulate shares very rapidly can create that effect. Gamma is another excellent, now this is the 10-year-old explanation. Gamma has to do with the rate of order flow. And this is the gamma maximum spot of all those options in those zero risk trades that are hedging neutral. So gamma maximum just basically is a fancy word for maximum order flow or maximum volume. So the fancier word is that when you're going from like this short polarity to this long polarity, there's just massive amount of hedging that takes place, and the majority of it, the overwhelming majority of all hedging maximizes here. As you're passing towards this level, volume is going to spike up like this as you get towards it, as the machines are all turning on at various places, but the majority of the machines are finding their balance there and rapidly hedging, so that volume starts to spike. So with options, you can determine where these gamma exposure levels are. These are weekly options and these are monthly options. They're separated because they both apply pressure on the market. So to answer your question, hopefully that makes sense. How do you predict volume profile ahead of time? So if I can predict that there's going to be volume there because everyone delta hedges. And so the options don't lie. The options landscape is the options landscape. And it's just basic math from there to calculate where the volume is going to be. Basic math for me. Your QQ puts. Bro, you've been swinging those puts all week. I know you told me about them. I hope you're doing some really good on that. It's a containment zone for hedging, as Yogurt has said. Yeah. So Matt, could you shed some light on JPM collar, please? Oh, yeah, that's the answer. Long from red DD band. That's not DD band on the red. No. No, I'm not, guys. I can scream it till I'm freaking blue in the face. I had to sit out date if there ever was one. It is a definitive market crash right now. We are crashing right now. I wouldn't touch this with a 10-foot ball. This is the crash I tweeted about this morning. The market is crashing and collapsing. This, by far, is the starting point of the rest of the day. And I'm going to go play some Call of Duty, so I'm done. Where will NASDAQ be tomorrow? Oh, God. Don't ask me. I don't know. That's why I'm saying I don't know. I cannot tell you for the life of me where the bottom's going to be. I only know I don't want to long it, and I got to stay really far away from this. I love when you guys are trying to figure out where I should trade or where we should trade or where we should do. There's nothing wrong at all with missing out on this market. Where can NASDAQ be today? It could be there. It could be here. It could be here. It could be here. This is irrational and hard to predict. You guys remember my $40 investment that I made today? I knew it was going to be like this. I knew it was going to be insane. I knew it was going to be stupid. Helldivers Ace. Helldivers is cool. Big Gamma Note, SPI 570. Let's check it out really quick. 570. Let's go to monthly maps and see if we got anything kind of like cluing us in on some spots. No, nothing, man. Nothing here. Woo, baby. Nothing here. Nothing here. Yeah, we on our stuff, we don't have any sign. There's nothing that I can predict from our stuff. So somebody saying 570, I don't disagree with that. Any technical levels that we're talking about? Let's double check. Yeah, I don't see anything, man. So, Gus, the idea is that volume profile, while we can give you where high volume pivots are likely going to be if you pass through them, this is an evolution of this. And this by far is more like a revolution of that. So our stuff is very, 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 very solid. So S&P has a futures half gap fill of 56.55. That's possible today. Now let's find on NASDAQ. Let me show you the calculation that I'm doing here on NASDAQ. Oops. So over here, let's find it. When the futures gapped up whatever day it was, I think it was here, we never filled the gap. Yep, we never filled the gap. So there's a futures gap at 19,502. Gaps want to fill, guys. What ups? Okay, look. Here. Here. 19,618 is at least the bigger support on that run up. This is a half gap. I'm going to teach you guys your half gap stuff. Here. Scary. Let me go to the Twitter. Let me talk to the people that were like, see, bro, it's rallying. Let's see if there's any of those today. Bro, why aren't you trading, bro? Just trust me. The long was the right. Didn't that guy come in here and say the long was the right trade? I hate losing a viewer because they want to be silly. And they should just come in here and be like, what are you doing today, Matt? Why? Oh, good answer. No, there wasn't any told you so's. Okay. Okay. Boys, y'all want to play some Call of Duty? I'm done. I'm done. I'm done with this market. Stupid market. So, scary move because half gaps are very strong support pivots. And when markets are falling with an open gap, you're just eyeballing this. I mean, that's basically what we're looking for. So, that's my target. And you said about 570. I think that's about where that S&P one is. What's this? 57.53, 56.55. So, it's 100 points lower. Oh, you're even closer to here, 570. I'm thinking 563. And this is where the gap gets filled, but 63 is the half gap. So let me draw a line here so we can remember where that is. Yeah. But I think tomorrow at Knob Farms is going to be where that run comes from. Scary boys. Oh my goodness. But hey, you know what? With Rocket Scooter, we safely on the sidelines, right? This is how we do it. Dun, 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 dun. This is how we do it. Don't think that the smartest day traders in the room are slugging it out long and short in every environment. These are your influencers out there. They don't care if they blow up because they hedge your blow up. Look, all you got to do to make $1 million as a trader is to get 1,000 people watch you stream a day. Give out affiliate codes. Trade in any direction you want, and everybody will follow you. And if you blow up, they'll go buy the resets, and you made money that way. You make money in either direction. You hedge your bets. If you win, then you win. If you lose, then you win. And then this is what people do. So don't follow people like that. It's literally a hedge. It's joked about in the influencer community. People are like, I don't lose anymore because when I lose, I also win. Now, there's people that call shenanigans on certain others who take risk on purpose. It's definitely not me. I'm sitting the fuck out. But I'm blinking my eyes fast because there are certain people that trade very aggressively all the fucking time. Momentum bullshit and trading big lots, big accounts, all 20 accounts. And they don't give a shit if they blow up. You know why? Because they make $5,000 a day in commissions. I'm not calling out names, but I'm telling you, for someone trying to learn this game, that is not the game you need to play. The smartest traders in the room will likely have a strategy of market avoidance under certain conditions. I certainly have one. I have the best one in the game. I'm going to take my $42 loss and go cry all day because, boy, that was tough. What a tough day today. Not tough for me. Not tough at all. Was it tough for you? I don't know. But a lot of people are like, should we long, should we short, should we fall? Get used to saying, I don't know, and I don't care. It's not just I don't know, it's I don't know and I don't care. Today's not a day to care. You know what I'm going to do? When the market hits its stride and hits its bottom, it's back to being bullish. You know who's going to be the first one in? Me. You know who's going to be posting the $1 million I make on the way back up? Me. You know who's not going to lose all my money and be sitting at zero the day I need to have money long? Me. At the end of the day, me. We're going to sit out. We're going to be smart. Scrump saying me too. All you guys are saying me. This is not the market to care about. And the timing is very important to understand because monthly maps are going to show you that this market is going to be bad for a while. While S&P is trying to start to stabilize, we are in a bear market. And there's not even a bull hint until expiration at March and then expiration in April. Other than the monthlies, none of the weeklies are showing even a bull market appears until May. Okay. So timing, I've got like a whole quarter of this garbage. NASDAQ is even getting worse through May. And the liquidation, the bull side is lasting all the way until April. March is going to be absolute garbage. Absolute garbage. So you know what you guys can do? Be smart. Don't log in and watch YouTubers slinging 20x Apex accounts and shit right now. These people are fucking idiots. I'll trade circles around any of them any single day of the week. I'll have an open challenge. I'll put $1 million fucking dollars to it. Don't learn from people that are, God, my Tourette's is saying the R word, regarded. Literally don't. Don't. Be smart. Sitting out is the smartest thing to do because you know why? You'll be laughing all the way to the bank when you have your money on the way back up. This volatile environment is for idiots to trade. My real account has not touched this market in over 2 months. My real trading account. Not at all. Volatility, the first sign of volatility, I'm out. This is not where millions are made. I could scrape together $1 million a year trading 10-point moves in the S&P every day. I'd love to have that. I'd love to have that. So make freedom of speech is back. I can't say the R word. I've been wanting to so bad. I've said it all my entire life. So anyways, I love you guys. So we're going to get out of here. Be careful today. Don't get clipped. I'm going to get out of here. Call of Duty time, baby. Let's squad up. You want to play? Don't. This isn't the time to be hero. We can see about 3 months out this market's bad. So you know what's great? You will feel so different about yourself. If you disappeared for 3 months and came back and the market was even lower, you will feel like a genius. There's nothing wrong with missing out. Missing out is a pro strategy, and so is sitting out. You play Fortnite? I've never played. I've actually never played Fortnite. So we're playing Black Ops 6 today. So I'm going to actually play Black Ops. We'll squad up with like a handful of people if y'all want to play. We'll all be Ninja Turtles. Let everyone else out there slug it out with their 28 Apex accounts. Not today. Try it again, Cole. Cole was like a cat running across the keyboard there. Everybody go to Discord here if you guys want to play. Yeah, this song is awesome. Go there and go to the channel called Gaming.